Good afternoon to all of you. Welcome to our webinar. As Board President of EFFAS, I am pleased that so many of you are participating in this important webinar on preparatory work on EU non-financial reporting standards. I am delighted to see that we have very prominent speakers in the roundtable discussion, which will be introduced to you shortly. I would like to thank them very much for their participation and contributions. EFFAS is Europe's Center of Expertise on Corporate Reporting Standards. While our background is in financial reporting, we have now been working intensively on sustainability reporting for over 2 years. This demonstrates as well the importance attached to the interconnectivity between financial and non-financial or sustainability reporting to provide the full picture of the performance and value of the company. That began with the creation of the European Corporate Reporting Lab in 2018. The first outpost of the European Lab was a comprehensive collection of good practices in climate reporting published in the beginning of 2020. The European Lab is now engaged in a new project on business model and risk reporting, while also carrying out the mandate to explore possible European sustainability reporting standards. In parallel, I have received a personal mandate from the European Commission to consider governance changes to EFFAS should we be asked to go ahead and develop the standards. EFFAS was very pleased to receive both non-financial reporting mandates of the Executive Vice President Dombrovskis. This webinar is part of a series of 7 webinars. 5 have a country focus. We had the Spanish webinar on Wednesday and the Nordic webinar yesterday. We have a webinar focuses on financial institutions on Monday. Registration is still open. Today, webinar is focused on European organizations and countries other than those in which we held specific webinars. The objective of the webinars is to gather stakeholders' view on the tentative proposal of the project task force led by Patrick de Tombourg. An outreach document was published to support this webinar. The outreach document contains the key preliminary views from the project task force proposals. It can be found on our website. I would like to underline that the work is still ongoing. You know, public consultation and transparency are key characteristics of EFFAS work. The time schedule is too tight to allow for the normal public consultation. The webinars give an excellent opportunity to gather views of a wide range of stakeholders in the current time frame. The feedback of all the webinars will provide input for the development of the final recommendation that will be submitted to the European Commission by the project task force. The work EFFAS is undertaking on both mandates is based on the assumptions that there will be such EU standards. So I call on the speakers to provide their contributions in the roundtable on basis of this assumption. Thank you again for joining the webinar as speaker or as audience. I hope very much that you find the discussion worthwhile. I am now handing over to Patrick de Tombourg, who will further introduce the work of the project task force. Patrick, I am sure, is known to most, if not to all of you. He is the chairman of the French Standards Setter ANC and EFRAG board member and chairing the project task force. Many of you will know him from his report to French Minister of Finance of May 2019 on ensuring the relevance of reliability of non-financial corporate information and ambition and a competitive advantage for a sustainable Europe. Patrick, over to you.
Thank you, Jean-Paul. Do you hear me all right? Okay. Thank you for this introduction, Jean-Paul, and welcome to all of you for this outreach event, which focuses on, following what has been done and will be done at country level on a more European approach. And thank you for the panelists to be with us. As you know, we are organized via with two circles, an inner circle that the distinguished panelists that you see on the screen, and an outer circle. Apologies, the virtual webinar does not allow for a full interaction, but you have the chat box, and you also have the polling question that will be asked in due course. So more as regards the content, as Jean-Paul has said, in fact, there is a EU project which is dedicated to the quality of sustainability data, quality of non-financial reporting, and therefore of the data that is available for all stakeholders. It is a key element of success. In the report that Jean-Paul mentioned, I was mentioning that there was a risk of, developing policies, either at public level or at sectorial level or at business level, that wouldn't be based on agreed upon data. And that is a serious challenge. We all know what are the risks of potential greenwashing or social washing if, sustainability information is more communication than real thing. So the preparatory work that we are carrying out at task force level has a number of ambitions and a number of challenges. The first challenge is not to trespass the limit which is dedicated to the legislative level. And as you know, we are doing that in parallel. So please, in the expression of your own contributions, we need to bear in mind that the revision of the NFRD is underway, and maybe to a certain extent we should have been, waiting for the directive to be clear to conduct the preparatory work, but it has been decided otherwise due to the urgency, and therefore this is one of the challenges, not to trespass and to be totally complementary at the same time with what is being drafted at the moment at a Commission level. The other challenge is not to anticipate too quickly on the standard setting per se. It's preparatory work. It's not yet the standard setting. Some of us might have wanted to that the work be ending with a list of indicators or a system already in the time frame. It was not possible, and it was not the mandate. So these are the two limits. Now, bearing that in mind, we have focused on a number of key points that we will review today. The first one is the foundations, i.e. all the key points that have to be borne in mind when standard setting in the EU, i.e. the specific EU environment. And we will dedicate the first floor to that. The second one is, of course, a standard setter needs to operate in accordance with the conceptual framework, and the concepts will probably be established by the directive, but its operational translation into standard setting would be the task of the standard setter. Therefore, the second slot would be dedicated to the guidelines to operationalize the EU concepts. The third one is probably extremely important. It is the content per se, the architecture, the reporting areas, and also the topics and subtopics to cover in order to have a comprehensive approach to sustainability reporting. Of course, under slot 3, we concentrate more on the target than on the first step. But nevertheless, it's absolutely essential to define properly the perimeter of the future sustainability reporting in a mandatory environment in the EU. 4, the other element of a standard setting is, of course, the reporting structure. Where should the information be located? How should it be structured? What would be the digitalization process to be followed? And what would be the interconnection between non-financial information and financial information? And finally, but this is more open, the priorities and roadmap and also the cooperation with international initiatives, both ways, is a key topic which we are at the moment addressing. So to give you just a flavor of where we are at task force level, on slot 1, 2, and 4, we have already progressed a lot on the basis of a first step in our consensus building with a good level of support, I would say. So this is expressed in the outreach document that has been shared last Monday. As regards the architecture, we had a first go at it, so it's more open. We still have to finalize our consensus building on this. We are at the moment receiving the feedback on our questionnaire, internal questionnaire to the task force. I think there is a good level of support too, but we of course need to be careful because we don't want to preempt the final conclusions. All of this, by the way, what is in the outreach document is preliminary and subject to modifications, changes, enhancements when we finalize the work. And as regards 5, as I said, it's pretty open, so you don't have much in the outreach document because we would like to hear your views. We are keen to listen to you and would very much like to be in a position to take your input to improve the report and the recommendations that we are going to make to the Commission in due course. There will be polling questions that will be presented for each and every slot. So, Saskia, do you have explained how it works? Or the polling questions?
They have already done the first one on their background, so I think
Wonderful.
they managed to do it.
Wonderful, so no problem. So each slot will be organized as follows. First of all, a very quick reminder, because we assume that you had a look at the outreach document, a reminder by Piotr Biernacki of the content and the key topics. And then we have distinguished panelists that are going to give a 5-minute intervention, contribution, followed by reactions 2-3 minutes by other panelists. So we have 2 for each. We have allocated tasks. We have 2 categories of interventions, a 5-minute one and a 2.5-minute one. And then we retain a little time at the end because each slot is 30 minutes apart from the architecture where we dedicate 40 minutes. We will we will take questions via the chat box if I can get that. Okay, so I think we should immediately move, if you all agree, to slot 1 on ESS stands for European Standard Setting. So we are talking in this first slot about foundations, and I hand over immediately to Piotr.
Good morning, everyone. Thank you, Patrick. It's a pleasure for me and an honor to present the results of hard work of the project task force that we've started in September. And as you will see, it is not finished yet, as Patrick said, and but we feel we're ready to consult the current state of work with you. The project task force proposes the new European standard setting to be based on 5 building blocks with 2 overarching principles. So if I could ask to move to the next slide, slide 6. Altogether, those overarching principles and building blocks form the mission and role of the European standard setting, and then are cascaded down into the architecture of the standards. Regarding those 2 overarching principles, first, we propose the system to be principles-based. In comparison, a rules-based system would mean that whatever is not in the rules is allowed. In a principles-based system, the system consists of principles and precise prescriptions. When a precise prescription is lacking, then the report preparer should consider the principles and act in compliance with them. The second overarching principle is that information needs of a variety of stakeholders and users should be taken into consideration, which means that it's not built only for investors, but also other financial institutions, employees, business partners, civil society, or public authorities. The 5 proposed building blocks in the ESS foundations are as follows. The first one, it should support the European sustainability reporting momentum. So the reporting should help to introduce and develop the European Green Deal, the Sustainable Finance Action Plan, among others. Then, addressing the second building block, addressing the specific challenges of financial institutions, because they are both report users and report preparers. But the most important thing is that European standard setting should facilitate reports that are used later by banks, insurance undertakings, or asset managers to stimulate and accelerate sustainable transitions through, for example, sustainable financing, sustainable investments. The third building block is including small and medium enterprises in the sustainability reporting system in a proportionate manner. Of course, the legislators will decide in Level 1 Act which SMEs and to what extent will report sustainability information, but if they are included in the system, their disclosure obligations should be proportionate. Of course, a cost-benefit analysis should be an element of good standard setting. The fourth building block fosters sector-specific sustainability reporting relevance. Well, we see that impacts of particular sectors on people or planet differ significantly. So therefore, it is clear for the project task force that a specific attention should be given by the European standard setter to the sector level, so that these different impacts are adequately addressed. And the fifth and last building block, acknowledging the importance of intangibles in sustainability reporting. Intangibles are recognized in financial reporting only when acquired, So the project task force assumes that a better understanding of the impact of intangibles is important, especially their impact on social and environment value creation is generally considered through topical disclosures. Thank you very much. Patrick, back to you.
No, thank you, Piotr, for this presentation. So I would like to move now immediately to the contribution of our panelists. I turn to Vanessa Ottomans, who is from the accountancy profession. She works for Deloitte in the Netherlands. So please, Vanessa, could you react to the foundations, please?
Thank you, Patrick. Thank you, Piotr. Firstly, I would like to thank the task force for the work they've done so far to move us forward. We all know that time is of the essence for the sustainability transformation of our societies and economies. I will cover feedback on the two overarching principles first. On principle one, we at Deloitte are in favour of a principles-based approach to sustainability reporting. However, we are also aware, based on our experience as auditors, advisors and accountants, and the feedback from our clients, that the implementation of a principles-based approach requires sufficient levels of guidance. If guidance is absent, ambiguity will result, as preparers and users of information will not be interpreting and applying the principles in a similar manner, and this can cause challenges for preparers and users of the information, as then the units of measurement applied in the preparation of the sustainability report will not be consistent. And a good example here in the social sphere are the units related to headcount or training hours in terms of people, HR-related targets and metrics that may not be consistent from area to area. The practitioners in sustainability reporting also know that today much effort and time is wasted in the preparation of reports and the analysis of sustainability reports due to ambiguity and what some call alphabet soup of sustainability reporting. This time and effort should rather be applied in moving the agenda of integrated performance forward to underpin a sustainable society and economy through better decision-making and capital allocation. It is also important to note that without clear guidance on sustainability reporting, in other words, suitable criteria, the ability to evaluate the consistent application of the criteria is compromised, and with this, the auditability of the reporting as well. I'll now move to Principle 2. Whilst we recognize the need for an inclusive approach to the stakeholders of sustainability reporting, we also feel here that further guidance and prioritization may be needed so that we focus on what is achievable and do not hold the momentum back, as is also listed in a building block. In this way, the standard setter will assist the pragmatic implementation of the reporting and help us move forward with urgency on this important agenda in Europe. So that's on the two overarching principles. I'll now move to the building blocks, and here we too support the 5 building blocks and offer some additional commentary on the building blocks. On building block 2, we do feel it's appropriate to recognize the role and particular needs of the financial services sector, and we thus recommend that the building block should perhaps be referred to as the financial sector rather than financial institutions to show the broader remit of this sector of our economy. In building block 3, we believe that larger SMEs and those involved in risky or sensitive sectors should definitely be reporting under the sustainability standards. And indeed, as the task force has noted, proportionality is key. And therefore, smaller organizations will need to be supported as they do not have the capacity, skill or resources that others have that are larger and who are perhaps better funded. This is important, though, because SMEs are part of the value chain of larger entities, and the larger entities will undoubtedly have to report on what's happening in their value chain. So we should make sure that there is consistency in what SMEs report and what is then also asked of larger entities to report. But the depth and extent of reporting for the SMEs may be adapted consistently with the materiality principle, and as I've said earlier, definitely there should be clear explanations, guidance and support. On building block 4, we support the development of sector-specific sustainability reporting and relevance, but we would definitely urge the standard setter to first focus on the core set of subtopics that are sector agnostic to support the momentum of sustainability reporting in the EU as listed under building block 1. Overall, we believe that the urgency of the need to steer capital towards a sustainable economy for Europe is key, and also because the challenges for climate and SDGs are global, we should definitely move that the EU sustainability reporting standard setter should work on 3 goals in parallel, similar to what you actually have in this outreach document. These 3 goals are to assist the users and preparers of corporate reports to prepare and use information to the extent possible, using the same language and basis, whether they are at a European level or global level. Here, a pragmatic approach in building what is in use or usable may be a very good idea. Examples of the World Economic Forum's International Business Council, who made a start, and also the examples of climate change and climate risk that we have. The second goal we believe the standard setter should strive to achieve is to avoid unnecessary complexity by creating different layers of standardization which are not needed. And finally, we believe that the standard should be very proactive to meet the needs of the European community and therefore join into international developments that move this reporting agenda forward, whilst at the same time meeting the needs of the EU. So therefore, we think it may be a good idea to add an additional building block to the ones listed that focuses on the building on international initiatives to the extent suitable to the EU. So in summary, my feedback is that we support the principles and building blocks as set out in the outreach document, and that we recommend that the standard setter provide further guidance and clarification that enable the application of the principles in a manner that avoids fragmentation, supports comparison by users of corporate reports, and fosters auditability. Thank you very much. Back to you, Patrick.
Thank you very much, Vanessa. I turn now to Dawn Slevin. Dawn is advisor to CIF Ireland. She is, and CIF Ireland is a member organization of Eurosif. So Dawn, the floor is yours.
Thank you very much, Patrick. It's a very great pleasure to be here today, and I'm happy to represent Eurosif and CIF Ireland. And I'm speaking about the principles and also building block 2 on financial institutions and building block 4 on sector-specific relevance. And firstly, I may say that safe agreement with the principle-based approach and the 5 building blocks. A principle-based system work, including the precautionary principle, the polluter pays, and the principles of subsidiarity and proportionality. The principle of subsidiarity ensures that EU member states remain important policymakers through shaping EU laws and standards that relate to their geographical and sectoral situations. This principle-based system is dynamic and highly interactive, requiring a comprehensive set of measures, which when well designed and implemented can promote and support the state of art in disclosure standards. Conversely, a poorly designed or implemented system can cause a patchwork approach, aversion to change, and diversion of attention by interest groups. Users of information need to have confidence that preparers have used the same assessment and reporting processes, ensuring consistency in metrics and comparability. This means that member state autonomy needs to be balanced with a harmonised approach, which ensures that comparability of information is maintained across the EU. And so the Non-Financial Reporting Directive 2 needs to be consistently implemented across EU members, as do its standards and guides, and that is one of the underpinning comments that you hear me all right, Patrick?
You are on mute.
I'm not mute. I think there may have been a problem there with sound. Did you hear that okay?
Patrick is on mute.
Dawn, I think you can perhaps repeat the main parts because it was not so good a connection.
Okay, my apologies.
Ne mettez pas en mute. Restez comme ça.
My point again, I hope. And we do endorse it, but it does need to be consistently implemented across EU member states, as do its supporting standards and guidance.
Do you hear me, Dawn?
Yes, I do, Patrick. Are you having problems with my connection?
I suspect so. You know what? I was telling you, you know what? Why don't you disconnect and reconnect, and I'm going to move to the other panelists, and I give you the floor afterwards, okay?
All right, thank you very much. I'll do that.
Okay, so I turn to Nicolas Naudin, who is a member of the ecoDa task force on ESG. So Nicolas, could you, I'm sorry to urge you to speak now, but go ahead, please.
Thank you very much, Patrick. Good afternoon, all, and well, thank you all for putting together these very solid foundations. So I was asked to give a quick comment. I believe that with these principles, the overarching principles, and the building blocks we have here, a very comprehensive approach to sustainability reporting. In this picture, we can see the effort to be done in terms of data availability and data comparability. The comment I would like to make is that from a board perspective, the keyword and the priority is relevance of the sustainability information. By that, I mean that we are primarily interested and looking for information that supports the what I would call the strategic decision-making process of the company, and that reflects the way, of course, these sustainability matters are embedded in the strategy and the performance management of the company. Same goes vis-à-vis our external stakeholders. For us, a sustainable reporting system should aim at explaining the nature of the business, the nature of the business model, how we are making our strategic decisions based on this sustainability information, and moreover, how we are arbitrating the various and often conflicting expectations of our various stakeholders. So to summarize, availability definitely, comparability of course, but not at the expense of relevance, which is again first and foremost. So the data users, and that's the good news, will have to take a deep dive into the business model of the company. That's our view, and the reporting system should create the conditions to do so.
Thank you, Nicolas. May I turn to Mark Vasson, please, now? We don't hear you, Mark.
No, thank you, Patrick. Sorry, I had to get off mute. And welcome everyone, and thank you very much for having me here today as one of the participants in the roundtable. The views that we express, I understand, are our own, but I can tell that in the short term that we had available to prepare, we also had a number of discussions within Accountancy Europe, whom I represent as a deputy president, and so therefore, although the comments that I make today, they are mine, but they have been informed and also are directly supported by the discussion that we had in the accounting profession so far. First of all, let me congratulate the project task force for working the work that they have done, and I must say you have been working to a very challenging timetable, so therefore we really commend you for the hard work that has been done. I think that the pressure on the timetable, though, also means that we only have the slides, so we got the high-level principles, and that means that clearly maybe we have not yet a full grasp of all the the finesse of what is being proposed. But that being said, I think we have enough to make a number of comments. I think the overall impression that I would convey is that the project is very ambitious. And I think it has actually a very broad scope that maybe was even broader than we had expected initially, because it does cover the whole spectrum of sustainability reporting and beyond. So not only I think the standards pertaining to specific public policy areas, but also general disclosure standards relating to enterprise value creation. And I thought that is particularly, I think, because you also talk about the closing the intangibles gap, right? And I think that's right, but it is certainly showing the breadth of the ambition. There is a point, I think, that also the first speaker made, and that is also a question of timeliness. I think we all actually, I think, agreed that the issues that we're facing are very, particularly in relating to climate change, are very pressing. And I've heard Alain also very often mention this, that there is a real-time sensitivity. So there is a question, but maybe that's later on the prioritization, whether there are certain things that can be prioritized, because actually getting this all that is being proposed off the ground timely, to agree, to set up, to get the resources that are needed, that is I think quite a challenge, and it needs to fit the ambition timetable that Europe has. I have two general comments, Patrick, if I may, on specifically on the building blocks and the overall. I think one point was also made by the first speaker, and that is, I would hope that the final document tries to connect as much as possible to the terminology and the definitions that we are actually familiar with in the global discussion as well. So we actually note that at places there are subtle differences between what is being presented by the project task force and what is commonly used in the world. And I'm giving as an example for ESG. For ESG, the G is in the paper is defined as general, whereas I think overall in the world normally that is governance. As just an example, but I think there are more. For example, also there are elements of the task force of the TCFD framework, and sometimes you see that there are subtle differences between what's in the paper and what is actually used. And it's the question: do you at least need to have a kind of a bridge between what you mean and what is generally used in international discourse on these matters? Then the last comment, and I think that is also echoing what our first colleague from Deloitte said. Is that also from an Accountancy Europe perspective, when we discuss it, we are on the point of building on global initiatives, and I think it's also something that the Commission and Vice President Dombrovskis has emphasized that should be done, and so therefore is the question whether this should not actually be part of the building blocks. I know that you have it in the operational guidelines. There is a benchmark with global, but it is a question whether this should not be, one of the building blocks. So this completes, I think, for now, my few comments on this part.
Thank you, Mark. I turn to Michaela Croitoru, member of member of European Issuers. Michaela?
Hello.
Yes.
Good afternoon. Good afternoon. Thank you for the invitation. I have, let's say, three hats. I will speak from my opinion. I present my opinion. ARIR, which is the Romanian Investors Relation Association, and the European issuer. Regarding the first principles, I would like to mention that it is important to have clear guidelines regarding these principles and to use, if possible, an example-based approach to support the correct implementation of the principles by all the preparers, because indeed this was a problem in the previous reports. Regarding the second principles, I would like to emphasize the importance of taking into consideration the needs of different users categories. In our activity, we identified that this was one of the factors that influenced the relevancy of the sustainability information included in the previous reports. How will the relevance of the information included in the report be ensured for each category of users? How will the information respond equally to the needs of different types of users? Or maybe we should prioritize these users based on specific criteria like dependency, influence, and others, and decide according to this what information to provide. Another important and sensitive aspects refer to block number 3, related to SMEs. There are voices that say that SMEs should not be included in this standard, not to have this obligation to report non-financial information. But if they are going to be obliged, we should take into consideration a proportional approach to them, because for sure this will create too high compliance costs for them. I may add that there are also other types of companies that are not SMEs, are not listed, but are under the scope of the directive, which may face various challenges regarding the implementation of such a standard. I would emphasize the situation of some companies, regardless of their size and type, which are in the eastern part of Europe and which have mainly a local presence. Most of these companies are still strengthening their sustainability integration process, and they recently started to report the sustainability information. For this reason, they still need further guidance and time to adapt and to improve their reporting performance. These companies will face significant difficulties and costs to comply with such a standard. Therefore, the non-financial reporting frameworks need to be elaborated in close cooperation with all types of companies to make sure it is operational and that nobody is left behind. And my last remark refers to the non-new companies operating in the European Union. Non-financial reporting obligations should be extended to this too, in order to avoid unfair competition. Thank you very much.
Thank you very much.
Patrick, your microphone is mute.
No.
Since we cannot hear Patrick, let's go to Dawn, who is back online, and I think she will repeat what she said before and inform us about the standpoints of Eurosif, and then hopefully we get Patrick back. Dawn, we go first to you, and then we will also look at the results of the polling questions. Dawn, over to you.
Thank you, Saskia, and my apologies for that temporary interference. So firstly, as you know, I'm representing Eurosif, and Eurosif broadly are in favour of the principles-based system and the 5 building blocks. And I want to say some words about the principles-based system and also the block 2 on financial institutions and building block 4 on sector-specific relevance. So a principles-based system is the foundation of European policy, environmental policy and regulation, including the precautionary principle, the polluter pays, the principle of subsidiarity and proportionality. The principle of subsidiarity, as you know, ensures EU member states remain important policy makers shaping EU laws and standards that relate to their particular geographic and sectoral situations. The principles-based system is dynamic and highly interactive, requiring a comprehensive set of measures, which when well designed and implemented can promote and support state-of-the-art disclosure standards. Conversely, a poorly designed or poorly implemented system can cause a patchwork approach, aversion to change, and diversion of attention by interest groups. Users of information need to have confidence that preparers have used the same assessment and processes, ensuring consistency in metrics when reporting their impacts. And so the Non-Financial Reporting Directive 2 needs to be consistently implemented across EU member states, as do its supporting standards and guidance. And this is one of the key recommendations made on behalf of Eurosif. Through a well-designed principles-based system, Europe has already become a key standard setter in areas of environment, consumer protection and workplace safety, and has demonstrated that our system is fit for purpose also for sustainability-related reporting standards across the spectrum of users, preparers and other stakeholders. And at the core of this system is stakeholder engagement, the overarching principle number 2, as well as impact assessment, monitoring and regulatory scrutiny. The 2018 Sustainable Finance Action Plan and its successor, the renewed Sustainable Finance Strategy, provide the background and context for NFRD2 and the reporting standards, as well as the other amendments to the financial regulatory framework. And following the success of the action plan, investment firms now need access to data that, of course, is reliable, consistent and comparable. But this accessibility to data should be an imperative of the Sustainable Finance Strategy going forward. I also want to say a few words on the pace of change. Through the development of a comprehensive set of reporting standards, Europe is best placed to enable sectors of our economy to rapidly transition to sustainable operations at the pace necessary to urgently halt our warming planet and alarming biodiversity loss. In doing so, encouraging knowledge exchange and innovation in sustainable technologies and processes across all sectors of our economy is necessary. And this will create jobs, boost the economy while supporting healthy ecosystems and lifestyles. It is clear that sustainability-related information needs of the investment community are increasing very substantially and very quickly. The demand for better information is driven on the one hand by investors needing to understand the risks resulting from sustainability factors and the crisis we face, and on the other, wanting to avail of the opportunities presented for growth in environmental and socially sustainable financial products. And so, considering these three issues of harmonisation, data accessibility and pace of change, I would like to propose a third principle be considered, and that of equal standing, which underpins the overarching aim that sustainability-related reporting be recognised as of equal import to the functioning of the European economy as financial reporting currently is, and reinforcing that sustainability-related and financial reporting obligations are both interconnected and interdependent. This third principle would enshrine a drive for sustainability-related information to be prepared with an equivalent level of rigour as financial information, be balanced, consistent year on year and comparable across companies, and be available in the same reporting structure, context and resources as financial information. And I do understand that that is a topic that the NFRS are exploring at this time. But again, it is to have it put as a third principle of equal standing. Now, I would like to also say a few words about building block 2, addressing specific challenges of financial institutions. Investors are financial market participants and advisors subject to the Sustainable Finance Disclosure Regulation, which brings to bear reporting obligations at firm level and product level, and so they are preparers as well as users. For many investors, their own disclosures in complying with the new and evolving requirements is just the beginning of their journey to transforming their portfolios into environmentally and socially sustainable investment products. Investors want to move beyond their compliance disclosures and focus on building their roadmaps for Paris alignment, for the Sustainable Development Goals and EU taxonomy alignment. They also want to influence their value chain, including their ecosystem of service providers, fund administrators, legal and audit providers, and crucially, their investees whose actions are the ultimate solution to the crisis we face. And so in this context, it's recognised that underlying companies have accountability to a wide group of stakeholders, their own workers, local communities, suppliers, as well as investors, and their impacts can be far-reaching. And the amendment to NFRD by the taxonomy regulation last year does require companies to report on environmental objectives to which to make a substantial contribution and on meeting do no significant harm thresholds, with commensurate data on turnover, capex and opex. This was a good starting point, but it is now anticipated and hoped that NFRD2 will substantially expand its scope to include a wider range of companies required to report on sustainability factors. And particular topics of concern for investors include double materiality and the more forward-looking nature of sustainability disclosures compared to financial. And double materiality, on the one hand, the impacts of sustainability factors on the business model over the long term, and on the other, the second side, the impacts of the company on sustainability factors. And it's this second side where there is currently even less data than for the first time available to investors. The anticipation is that the implementation of the SFDR and the taxonomy regulation and others will bring change for the better, but it is imperative that preparers improve their sustainability-related disclosures at the earliest, so that investors can progress at pace with their sustainability investment roadmaps. And also, on the forward-looking nature, the risks and opportunities for sustainability-related factors need to be taken into consideration, and the potential will be for the TCFD's approach on their climate scenarios, offering forward-looking approach to be considered, recognising that TCFD is a single materiality perspective and is also focused on climate risks and does not fulfil the full range of European standards. But this again endorses that the standards reach out internationally for solutions that are available to it. And finally, very quickly, on building block 4, I would like to underline my view that a sector-specific reporting level is necessary to ensure that entity-level criteria and goals for reporting and achieving sustainability-related KPIs are consistent and comparable. And I can say a few more words on that on the architecture section. So thank you very much, and I look forward to the ongoing discussion.
Thank you, Dawn. Saskia, do you hear me? Okay, you're on mute.
Patrick, no, yeah, Patrick, we hear you, Patrick, and we also, if you want, we can discuss the results of the polling questions.
Quickly, because as you see, we are lagging behind a little bit, lagging behind schedule. So I would like to catch up. So please, go ahead. Give us the...
Gloria, are you going to put it on the screen for everybody? Yeah, so the people can see it as well. So, Patrick, I don't know who you want to react.
Go ahead, Saskia or Gloria.
So we see basically that for the SMEs that the scaled down version is the most important. And that's also what we heard to a certain extent in the comments that the people made on SMEs, and we will have further comments on SMEs later. And you see as well that the sector should be covered over time with an initial emphasis on the higher risk that has, if you count the yes and the yes to a reasonable extent together, the highest impact. We noticed your request of the audience to leave the questions open longer because you had not enough time to complete it. And indeed, if we see the numbers here, they don't correspond with a lot of people attending this webinar. So we will leave the next questions longer open so that each of you has time to complete it, and we do value your input. Over to Patrick.
Okay, thank you, Saskia. Now I move to slot number 2 on conceptual guidelines and the operationalization of guidelines by guidelines. So I turn to Piotr and ask him to make the reminder presentation.
Thank you, Patrick. And next slide, please. We understand the operational guidelines as a set of tools that should be developed by the European standard setter at the very beginning of its work, before any actual standard setting work begins. These guidelines should help the standard setter to develop the reporting standards. So I'd like to ask for slide 8. The project task force, as today, proposes 5 guidelines, or guidelines in 5 areas. The first one would be guidelines how to align the reporting standards with European policy priorities, and at the same time how to benchmark the reporting standards to the global policy priorities. Then we propose that there should be guidelines that define the quality of information and quality of the reporting standards themselves. This would be important to support later assurance of sustainability reports. These guidelines on quality of information should explain how such characteristics like faithful representation, relevance, comparability, understandability, and reliability should and can be embedded in the standard setting process. The third area where we propose that guidelines should be developed is time horizon. Guidelines that would help to encompass both retrospective and forward-looking information, as we see that both time horizons are important in sustainability reporting, especially that usually the sustainability impacts are going much farther into the future, into longer time horizons than, for example, financial planning. Then the fourth guidelines should be the guidelines that define the scope or level of reporting. In case of sustainability reporting, the scope of information needed is usually broader than in financial reporting. In financial reporting, this usually covers the operational borders, the entities that are under the control of the reporting entity. While in sustainability reporting, we sometimes in the reporting we include even the whole value chain. So these guidelines that define the levels of reporting should define the levels of reporting and their granularity. This may include, for example, geography-specific information, activity-specific information, which is, by the way, for example, the case in the taxonomy regulation, or, for example, site or asset-specific information. And the final guidelines, which might be the more complex ones, in my opinion, would be guidelines that would translate the double materiality perspective into both the standard setting process and into the reporting process. The main goal of these guidelines would be to operationalize the concept of double materiality and clarify that both dimensions, the outside-in dimension and the inside-out dimension of materiality of impacts should be considered. Materiality assessment should be, in our opinion, made at each level of sustainability reporting architecture. We will talk about architecture of reporting later, but here we can say that this materiality assessment should be done at the sector agnostic and sector specific level by the standard setter, and it should be also done by at the entity specific level by the company. The guidelines on materiality should also explain how the company should report on their own materiality assessment process. Thank you.
Patrick. Thank you, Piotr. In the interest of time, I turn to our first panelist, Wim Bartels, representing the Dutch Accounting Standards Setter. Wim?
Thank you very much, Patrick, and thank you for inviting me here today to share views on behalf also partly of the Dutch Accounting Standards Board. Also, in this case, the views that I share are primarily mine, but I have discussed them with representatives of the Dutch Accounting Standards Board earlier this week. And maybe to start with that, when we discussed that internally, we started with saying that the view of the Dutch Accounting Standards Board is that a reporting initiative should ultimately fit together in a comprehensive reporting system. And with that in mind, the Accounting Standards Board would really be in favor of a modular approach, where the EU standards would effectively build on existing initiatives. And that makes me comment maybe on the first operational guideline presented by Piotr, which is on policy priorities, where it currently says benchmarking global. I read that myself as benchmarking global policies, but the view that we discussed earlier this way, that it would be important to build on other international initiatives, and therefore the guideline may be a bit stronger than just benchmarking global, but really starting to build on it. And in light of that, it would also be important, I make that comment because it hasn't made earlier, to put this within a conceptual framework. We haven't seen that yet in the current setup of the ESS system, if you like, and therefore a conceptual framework would be important to consider. That should then also, in view of the people of the Accounting Standards Board that I also talked to earlier this week, to address really the exact purpose of the standards and what the standards want to achieve, as you have that, for example, in financial reporting standards. I would also have a strong recommendation relating to double materiality when it is about terminology. And I think Mark shared a similar comment on other topics, but here the concept of the term of sustainability and financial are meaning, I think, somewhat different in other places than it is meant here, where here it covers also intangibles, and that can create really confusion in my view. So the strong recommendation would be to really align terminology with a common understanding to date. And that may seem a minor thing, but I know from my own practice that it isn't, because it can really confuse reporters on users on what is really meant. Then on the principles, which is named as the quality of information, also there a recommendation to take into consideration aligning with existing frameworks. And I think the words, Piotr, that you use do align to a large extent. But for example, when I look at the ones that you named, I would personally miss the concept of the principle of balance. That is part of the GRI guidelines. And in another capacity, I have worked within the corporate reporting dialogue to look into the principles. And we learned there that there is a lot of misunderstanding about different principles, where in reality they are the same, but they just use another term or another explanation. So I would recommend the task force to take a look into that and to align as much as possible. And then I have one further comment on double materiality in context also of the time horizons. As we all know, materiality means something very specific in financial reporting. And initially, when the current NFRD was released, there was, I think, also some misunderstanding on what it exactly meant. Now, that was, of course, explained in the further guidelines, but I think, as Piotr already said, it is very important, in our view, to clarify that what it really means in quite some detail, so that it is crystal clear what double materiality means for setting the standards and also for applying them. And that's my last comment relating that to time horizons. We agree with the split and the focus on both backward and forward-looking, but particularly the forward-looking comes with the question of which time horizons do you use for the both sides of materiality, and how do you set the boundaries for the time horizons to be considered. So that is something that we would give into consideration into the task force to further consider that when developing the overall schedule. And I think with that, Patrick, I hand over back to you. Thank you very much.
Thank you, Wim, for being precisely on time, first of all. No, just a point for clarification. It's not that the task force didn't want to produce a conceptual framework, it's that we believe that the level 1 will provide concepts. So it's a bit difficult to preempt, and therefore we are talking about operationalization of concepts without knowing for sure what exactly will be the level 1 concept. But that's the interest of the exercise. As regards qualities, don't worry. We have considered all the existing frameworks. We have seen also the differences in terminologies. And of course, at a moment in time, you have to choose one word, but then you put the right substance under it. I turn now to Michaela Croitoru, who was presented before. So on this topic, Michaela, please.
Okay, so I want to add something more about my 3 hats. As I mentioned, the one is from the Romanian Investors Relations Association and the other one from European Issuer. And the third one, which I said it's mine, it's actually mine in my quality of a sustainability consultancy of a company that is working with the most important companies from this country in the preparation of the sustainability reports. And another information that I want to share with you is that in Romania, the NFRD was extended, and starting with 2019, all the companies that had more than 500 employees were obliged to prepare such a non-financial report. So probably the revision of the directive is going to apply also to them. So having said this, let me continue with our opinion in this case. We are supporting a European action in the field of non-financial reporting standardization, aiming to foster convergence among international initiatives and to promote an European approach. It is important to promote the efforts made by European companies which are considered leaders in terms of non-financial reporting, to streamline international investors' requests for non-financial data, and eventually to prevent companies from having to comply with multiple reporting standards. As a matter of fact, considering the international nature and approach of most European issuers members, for example, and I may add here also Romanian companies, regarding their markets, shareholders or investors, it is worth stressing the increasing pressure they face from international investors, customers, and commercial partners to comply with their demands, with particular regards to international reporting requirements. If a European reporting standard will be adopted, these investors would probably not change their practices. Therefore, the establishment of a European standard setter in this field without regard to existing international initiatives would not streamline the flow of requests from stakeholders they face. For this purpose, considering that most European companies use several different standards to prepare the non-financial statements, with the particular predominance of the GRI framework, which started to be highly used in Romania too, we believe that any European initiative in this field should start by referring to them. Also, these international standards and methodology can be very useful as regards the quality and of the information and the content, because they have already important principles that are used by the preparers. Regarding the double materiality, this should be managed with caution, avoiding the risk to lose information that could be material. For this reason, the two perspectives should be kept separately. And I also agree with the opinion before me that it is very important to provide sufficient clarification for the implementation of this double materiality and also for the standard setup. However, companies need to remain master of defining what is material information according to their specific and sectors. The introduction of an obligation to produce, for instance, a negative statement explaining why certain issues are considered as not material could lead to illegible reports and the bureaucratic box-ticking approach of materiality. Regarding the time horizon theme, the current non-financial reporting practice is more concentrating on giving a backward-looking perspective. Integrating in the non-financial reporting a forward-looking perspective is something new, and for sure it will be difficult to be tackled by all preparers, having in view that this means to elaborate complex scenario analysis that can influence the timing of the reporting. And this could be seen also in relation to the location of the sustainability information. Because if they're going to be included in the management report, we need to be sure that the preparers will have sufficient time to prepare the non-financial information that will be included in the management report according to this new, ambitious and complex standard. For this reason, the flexibility related to the location of sustainability information should be maintained, or at least for the moment. Thank you very much. Patrick, over to you.
Thank you, Mihaela. I turn now for the shorter interventions to Kirsten Margret from Norsk Hydro. Sorry.
Thank you for that introduction, Patrick. I think that there have been very good points here from both Wim and from Mihaela, and I would like to give a further comments to it. But just to introduce myself, I'm representing the preparers, and Norsk Hydro, my company, has been said to be the world's first issuer of a public environmental report back in 1989. And I actually participated already then. And since then, I've had the responsibility for developing and executing Hydro's reporting strategy since 2004. And I have 7 years of standard setting from the Global Sustainability Standards Board, which is the GRI standard setting body. So I have a very broad and very long-term experience in extra-financial ESG sustainability reporting, whatever you call it. I'm also a strong promoter of integrated reporting. And still, I find the language in the outreach document unfamiliar to me. Wim and Patrick has already been touched upon it, but it makes it more difficult to understand the document and to give good comments to it. And I think that's important to be aware of. It seems to me that there has been very little ESG reporting or practitioner competence in the task force, which I think is a pity when we are talking about ESG reporting. And in particular, when we know that the emphasis that the Executive Vice President Dombrowski has made on building on existing reporting standards and frameworks. Regarding the double materiality, that's important to me as well. And I really take notice of Mihaela's concerns about missing material info if you should use the materiality concept from financial report, where the threshold is usually much, much higher than it is for ESG reporting due to the nature of ESG reporting. What are the impacts of the stakeholders' assessments and decisions? And has the topic significant economic, social, and environmental impact outside of the operational fence, which is quite unknown world for the financial materiality? Unfortunately, we know that the importance of the latter topic is too often underestimated. And when that takes place, the risk of significant reputational and financial consequences increases rapidly, and which is why this is so important also from a financial perspective. The materiality analysis must be done for each reporting organization. It's a bit unclear from the outreach document what is being meant there, if it should be by sector or by reporting organization. But I'm absolutely sure that it must be on for each reporting organization. There is no one-size solution based on sector, even though there can be topics that are likely to be material within one sector, and thus should be evaluated in the materiality analysis. My experience is that the needs of our financial stakeholders, at least the needs of the advanced ones, earlier mostly the socially responsible investors, but now surprisingly more and more of others as well, is very well aligned with the needs of our other stakeholders. That is, several other stakeholders, e.g. the NGOs, have a narrower but much deeper need, when they see our general approach to their field of interest and they understand that they can get more detailed information on on what they need, some actually seem to be surprised when they understand that we can drill down to almost any level in the organization, which of course is where the data comes from, and to be able to show the consolidated level at which we report on in the annual report. Thank you, Patrick.
Thank you, Kirsten. Just a quick clarification. Materiality is to be done, unlike financial reporting, where materiality is materiality perceived on information as a whole, where you have only one unit of measurement, which is monetary, and you in theory think in global terms. In the ESG area, you have to disclose on separate items with separate units of measurement, and that creates a different materiality perspective beyond the double materiality approach. So that's for sure. And as regards materiality, what is a topic material or not? This is standard setting, and it's also entity specific. So you have both. When you will see the report, you will see that the two perspectives are taken. Mark, I turn to you. I'm sorry. Can we, in the interest of time, can you be kind enough to?
I'd be very short, Patrick, very short.
Thank you.
I know sometimes the burden of a chairman, so I will be very short, and actually going to say that I'm going to just echo for 2 points that have been made by the previous speaker, and that we agree with them. The one is the comment that was made on the way that double materiality is described at the moment, and Patrick, it may be because, again, it's a summary and we need to see the full report, right? But I think the way that it was described here led, at least in our discussion, to some confusion, because it makes a distinction between financial materiality and sustainability materiality, whereas if you say the inside-out perspective and the impacts that a company has on the environment can both be financial or can be wider and be the wider social impacts, right? And I think, therefore, that was the confusion that was created, at least when you read it. It's only then, I think, a matter of, can you somehow align maybe more to some of the notions that are being discussed, for example, on dynamic materiality. That is a concept that at the moment is being discussed, that actually tries to tie these concepts well together. I think I would give that as a consideration to the task force. And finally, the point on benchmarking global, and the same sentiment that Wim expressed, that sounds also to Accountancy Europe less than maybe the ambition of building on, is one that we would echo. And I stop here, Patrick.
Thank you, Mark. For clarification, when we mean global policies, we are not talking about we are talking about global public policies. We are not talking about initiatives. Initiatives are covered by part 3 of our report, which is how to build on, cooperate with, interact with existing international initiatives. So when we refer to the benchmark, we are talking about Ilo Conventions, we are talking about SDGs, we are talking about human rights, all the overarching constructs that are over jurisdictions. So the existing initiatives are addressed elsewhere and will be addressed, and that's the topic for slot 5, if I may. Okay?
Thank you.
So Nicola kindly suggested to drop his willingness to intervene here. So we are almost back on track. Do we have some comments from other panelists on this key topic of conceptual guidelines? Bearing in mind again that conceptual framework, the concepts probably at a high level will be established by the level 1, and that we are anticipating somehow on the operationalization from conceptual framework, building from level 1, but also creating maybe a more comprehensive approach to it. So is there any burning reaction from the panelists? Saskia, do we have questions coming from the chat that we could ask one of our panelists to consider?
I think Lena will come in. She has a question. Lena?
Yes, there is a question specifically addressed to Wim because of the comments he made in his intervention. It's regarding SMEs and building on existing international standards, which can be attractive, but they are not adapted to SMEs. So we wouldn't like to see a second, something like a second IFRS for SMEs for sustainability information. So what would be your reaction to this?
Yeah, I think I'm taking in, thank you for that question, and taking into account Patrick's comment on that it's effectively also part of Pillar 5, or if I might call that, or Element 5. Let me still answer the views on that. I think one of the building blocks being to have a specific considerations and or requirements for SMEs. We would concur with that. I would concur with that. And with that in mind, I could see that they still could work together for SMEs, where if you have existing international standards and you have specific additional requirements for the EU, that the EU decides on which part of both of these would apply to SMEs. That would make still not, let's say, any conflicting requirements, but would a kind of distill the relevant requirements for SMEs from any international initiatives, and then with further EU requirements as they may come from the SSEs. That would be my, or ESS, sorry, that would be my take on this. And I understand you when you say we don't need a second IFRS for SMEs. I fully get that.
Thank you. Any other question, Lena? Okay.
Another one for you, Patrick, I think, to address this one. It's regarding building on international initiatives in general. How would the speed and maturity compare of the global initiatives compare and work with the Commission's proposals and timetable?
I suggest that we cover this under slot 5, if I may. Okay. So we will postpone until slot 5. Do we have the answers to the polling questions, Saskia?
Yes, Gloria, can you show them? So basically, to the first question on standing setting guidelines, whether criteria facilitating auditability and of sustainability information, there was a very large positive answer to that if you combine the yes and yes to a reasonable extent. And then on the steps.
Saskia, sorry, just one point for clarification here. We were asked to consider auditability. We were not asked to consider the requirement to audit or not to audit. So it's a different ballpark, if I may say so. But that's key, because standards which do not allow verifiability and auditability are not good standards. Sorry.
Okay, and then the second question in this on this theme was the double materiality in a step-by-step process, and there were 3 elements that came out: is understanding the reporting entities' environmental, social, and economic impact, the understanding and identification of the relevant users, and I think that's also what we saw before in the discussion that was an important element raised by Michaela and by others and by Dawn as well. And then the third one is identification of the issues.
Okay, thank you. So I'm not sure we are catching up, but we are making good, reasonable time on this one, so that's fine. We're moving to slot 3 without further ado. So slot 3, Piotr, the floor is yours for the introduction, please.
Thank you, Patrick. This is probably the most complex one and difficult to explain, but I will also try to be brief here. After a lot of work, as the project task force, we initially proposed the architecture of the new sustainability reporting system to combine 3 layers of reporting and 2 dimensions. Those 3 layers should be, in our opinion, sector-agnostic disclosures, sector-specific disclosures, and entity-specific disclosures. Each of those layers would consist of several disclosures and data points. Sector-agnostic, of course, we mean the disclosures that would be found material for all companies, regardless of their sector. Sector-specific, those disclosures would be material for some of the companies from one or more sectors, and the companies are so different from one another that a company may be in one of the sectors, but actually all the sector agnostic and specific disclosures may not reveal everything that should be reported, which is specific for this company. So there should be this special layer of entity-specific disclosures. When we move to the 2 dimensions, the first dimension is reporting areas, and the second are reporting topics. I'll first cover the reporting areas. So could you please move to slide 11? We at the current situation, we propose that this would be 3 main areas: strategy, implementation, and performance measurement. Under the strategy, we understand that this would cover the company's overall strategy, the business strategy. It would cover the sustainability risks, threats, and opportunities, so the challenges too, which should be identified from a double materiality perspective, and the general governance of sustainability-related matters. That's usually step 1. Then when we have the strategy, we've identified the risks, we know who does what, then it should be implemented. And under implementation, we understand the specific policies related to sustainability matters and the targets set by the company, and of course some detailed action plans, resources that are dedicated in order to reach those targets. And then at last comes performance measurement, which should include information on achievements, and also most probably some reporting against those targets that were previously set. And this covers a kind of reporting cycle where we go back the next year, probably the next year to the beginning to review the strategy, etc. So the reporting area, strategy, implementation, performance measurement would be the first dimension. And now the second dimension, which are reporting topics, how to categorize the reporting topics. And here we see at present 2 options. Could we move please to slide 12? So the first option is quite similar to one that is currently widely used. I mean, it is the categorization of sustainability topics into E, S, and G topics: environmental, social, and governance topics. Here, under governance, potentially we also consider renaming it to general, because the subtopics included here in this very first tentative proposal are not only of governance but also more general, like brand and communication or innovation. But anyway, the abbreviation would be ESG. But there is also a second option that we consider. Could we move please to slide 13? The second option is categorization into four topics, main topics: environment, people, organization, and relationships. Where environment is basically almost the same. People, it changes a bit the perspective from social to people, and then we propose to tell about organization as the third topic, and the new one, relationships. This topic would cover the company's relations with all its stakeholders. Under the option, the second option, you can see that these four topics are quite easily aligned with a multi-capital approach. Where we see that usually we speak about 6 capitals, but as two of them, the financial capital and the manufacturer capital, are usually quite well covered by financial reporting. The other 4, natural capital, human, intellectual, social and relationships capital, usually are not that reflected in financial reports. So it would be a proposal to align the reporting on those 4 topics: environment, people, organization, relationships, with these 4 capitals: natural, human, intellectual, social, and relationships. But also the first option, so categorization into 3 main topics, this also allows for being compatible with this multi-capital approach. So to sum up, the ESS, the sustainability reporting architecture would be based on 3 layers: sector agnostic, sector specific, entity specific disclosures, and 2 dimensions: reporting areas and topics. Thank you very much. Patrick, back to you.
Thank you, Piotr. One point for clarification. Terminology remains an issue. I heard the comments about moving from governance to general. We are not totally happy with that, of course, but we want to reflect the fact that, in fact, we are broadening the content of ES and particularly G. So how to reflect that is a bit complex. Now, between 3 pillars, 3 topics, 4 topics, or even there were proposals about 6 topics, at the end of the day, it's a matter of classifying. We would agree in general on the overall content, then it becomes a matter of classifying it, which is a bit different. So now I turn to our panelists. So I am happy to say that we have dedicated 40 minutes and not 30 to that important topic. But nevertheless, please keep the time. So I turn first to Alina Bletek, Olivia and Julius, SMEunited. Olivia.
Halina, good afternoon.
Sorry. Halina, of course.
No problem. Thank you.
I was seeing your beautiful ad behind you, that's why.
It could help. I didn't follow the whole process you got through, but I'm very honored that and I would thank you that I have the opportunity to bring the voice of an SME into the discussion today. I made already the first sustainability report with the printing office in 2009, according to the GRI guidelines. And I'm used to guide companies through reporting on sustainability. As you know, 99% of the companies in Europe are SMEs, and business owners are more and more aware of their accountability. They want to work on reducing their negative impact on the environment, on the climate, on society and on individuals. And they strive more and more to empower people, have strong communication with stakeholders, a strong commitment to biodiversity and healthy working and living environment, and so on. In their decisions, entrepreneurs are increasingly taking sustainability into account. Few report on sustainability. The SMEs who do are convinced and do it voluntarily. They really want to report on the relevant topics, and it's mostly by the GRI guidelines. They think about their strategy. They align the sustainability strategy to the whole strategy of the company. They discuss actions. They measure the improvements, measure the topics to work on, and they write sustainability reports, but they write it down in their other communication channels. Yesterday, I contacted still 30 SMEs. And I was surprised and not surprised because I said I could take part in this meeting this afternoon. And I was surprised and not surprised because nobody wants extra reporting and administration. You could imagine why, because it costs a lot of them. They have to pay experts and advisors probably. And it's very time consuming for the entrepreneur and or his employee or employees working on the team. So for that people, the return on investment when they have to report on sustainability is zero, they said. So they fear a false economy, they fear false jobs, they fear real costs on consultancy, advice, on auditing by big companies, and they fear that reporting will be more important than what they really do on it. But I said them, probably it will be an obligation to do that in the future. And then they said, yeah, when we have to do it, it must be possible to realize it with as little effort and expense as possible. So maybe we need some help of our sectors to give us guidelines, to give us teams to work on, to give us the information we need to do it fluently. So I have to ask you all, please think small first. What achievable is for the small companies will be achievable for the bigger companies too. Use the building blocks that fit to the size and maybe complexity of the companies. And I would like to make an appeal. If there will be one or more conclusion of this project that you are leading Europe through, please submit it to a selection of companies of different scales and ask them for feedback and reactions. Because let's keep in mind that the impact of COVID-19 on these companies was not only a problem in 2020 or 2021, but for the next maybe 20 years, it will be still have some impact. And it's really important that we have still our SMEs, that they will stay and keep the jobs of their employees. So when we think about the structure, and what Piotr already told us, the reporting structure must be clear and straightforward. The future standard must start with feasibility for the smallest enterprise. An entrepreneur must be able to do this in his own report, to do this reporting on his own. If concepts are too difficult and not understandable for them, that's a problem, and he or she must call in experts. In Flanders, we made, according to the GRI guidelines, but we made already some sector passports that help companies in the specific sector to work on the guidelines, to work on sustainability reporting, and maybe it could be an idea to check some of the passports and watch to and got some elements, pick it together to when you are creating the new standard. I have maybe an idea that you already discussed, or maybe not, but I can't check it. The SDGs are becoming more and more known to a larger public, partly because governments are also communicating about them more often. So the SDGs are the framework for sustainability towards 2030. It has been widely debated on, and it's now well known even in the SMEs. So why not build the new standard around SDG themes like people, planet, prosperity, peace and partnerships, and take that as titles like the slides Piotr presented already? It could be maybe help to understand the SMEs in where are we talking about? Why do we need to report? They can make a switch, they can make links, and maybe it could be an idea to rethink or think about the results that you want to see, but in a way that it's already a little known in Europe. It could be a solid foundation with a near solid base. So I thank you very much, and I give the word to Patrick.
Thank you, Alina. Thank you very much. Now I turn to Maria Alexiu, board member of CSR Europe. Maria.
Good afternoon, good evening. Thank you very much for this opportunity, and I'm so glad to be part of this panel and this discussion, which I believe you will all agree it is very important for large enterprises as it is for the small and medium-sized enterprises we have just heard. As I have been related to comment on the architecture that is proposed, allow me to say that representing companies, members of CSR Europe, but also a company in one of the most regulated, if you like, sectors, I am from the privileged side to tell you that what we discuss today is what the companies who are more mature in sustainability reporting, and they have really worked many years to embed standards like GRI, but other very relevant and important standards, including, for example, AA 1000 stakeholder engagement standard when we talk about materiality assessment of our impacts on social and environmental aspects. So we are privileged, the ones who have been already working on standards, to understand what we discussed today and to be able to see the opportunity we have in front of us. And really what we see is a great opportunity, first, to standardize and speak the same language, which is so important, as already said, is important for investors, is important for shareholders, is important for stakeholders, is important for corporations. Secondly, what we discuss is how we will really harmonize the environment, make it more clear and simple. So the architecture really helps us to build clarity. As already said, there are sectors that are already over-regulated, and they carry the burden of a load of a burden of reporting in many different ways for many different material issues to many different stakeholders. Allow me to say from my experience with the standards and also with stakeholder engagement that we answer different questions to the different key stakeholders. So there are questions coming from the investor community. Allow me to say, not the same questions coming from other key stakeholders. From many key stakeholders like employees, we need to answer why we do what we are doing, why we make the certain and specific decisions. Where the question coming from investors is mainly what we are going to do and how much is going to cost. So we need to understand that, and we need to use the proposal we have in front of us. First of all, to align, as we said, between our interests in this type of communication. Agreeing also that the report itself is not an end. The report is the tool, is one of the tools. So the report will help us, first of all, to build the internal reporting systems we need to have available to manage our impacts, to manage our social and environmental impacts. This is very important. And allow me to say that we can say that the architecture proposed, if seen from inside corporations, could be really a way to build internally and following this as an approach, which, as you described, is a concept-wise approach to move towards more context-based reporting. So it is a shift, it is a transformation that we propose actually, to move from content-based reporting to a more context-based reporting at the end of the day. And we need to agree how we describe the context. I believe the 3 layers really help us to give a description of the context. However, I think also that the internal architecture should be built according to the strategy of the company. And the more important element maybe here to underline is the governance to start with. It depends on the governance of the company whether the report itself is validated enough with the processes you have in place to provide accurate quality information to specific audiences that the company has to serve. So all in all, I think the architecture is really building on the current experience of almost 16,000 companies within Europe that have worked already and have started utilizing available standards, both from global standard setters like GRI, but also from sectoral standards. The sectoral standards are important, and they need to be further developed in order to allow a fair treatment among the sectors that all have a relevant impact to the economy and also a relevant impact to social and environmental issues. So certainly we need to fill the gaps for the standards that are missing for certain sectors that currently have not been in the focus of our interest. And there are such gaps that we need to take care of. In this respect, I think, taking under consideration the proposal we have in front of us, we can build further the right direction. I only want to add one critical element. This is harmonization and inclusion, both in terms of sectors, both in terms of enterprises, but also in terms of member states. We are not all in the same gear. We are not on the same level of maturity, and we need to build the capacity and the competence needed to reach the same level of engagement within the European Union market. And we need to work on that all together, and this is the most perhaps urgent element in our action plan to implement what is really proposed to be our way of enhancing trust and reliability in our relationships with our stakeholders. Thank you.
Thank you, Maria. I would like to go now to the shorter interventions. May I ask to the ones I'm going to give the floor to make sure that they stick to 2 minutes, please. So, Lucia Lima Rodriguez, you're a member of European Accounting Association Stakeholder Reporting Committee and Vice Chair of the Portuguese Accounting Standard Setter. So, Lucia.
Thank you. Hello, good afternoon. First, I would like to thank EFFAA and the European Accounting Association for the invitation to participate in this webinar. I also want to congratulate the Project Task Force for the excellent work they have done so far in such a short period. I agree with most of the work that has been done so far. As a scholar and a member of the European Stakeholders Reporting Committee, I want to raise some minor points. First, I have a previous general comment. The European Union was using the term non-financial reporting and changed the now to sustainably reporting. I know that the term non-financial reporting can be understood as being defined as a complement and thus not the most important, but in my mind it was clear that if you want to have a complete picture of the impact of a company in society, we should have a financial reporting and non-financial reporting. Both are important. The term sustainability itself is subject to different interpretations in standard setting and the corporate reporting realm. Are we talking about business sustainability or planetary sustainability? Thus, in my view, there is a need to explain clearly what sustainable reporting is, and there is also a need to define boundaries to sustainability information. Regarding the 3 layers of the European Sustainability Standards architecture, I agree it is important to have general information on the sector and the entity-specific information as proposed. This is in accordance with the recent developments in other international frameworks. Regarding the information on topics and subtopics that are to be disclosed, I consider that the task force should develop them further by relying upon the groundwork foundation of existing standards and frameworks. In my view, and the view of most of the EAA Stakeholders Reporting Committee members, it is essential to harmonize with what we already have and not to add to the alphabet soup that we have at the moment. There is a clear need to balance 2 major needs, in our view. The obvious need to harmonize and the need to clarify sustainability topics. Clarity is very important. At the moment, the Portuguese Securities Market Regulator is considering a proposed voluntary report model, and the proposal aims to assist companies in fulfilling the existing legal reporting obligations with a view to producing simple, objective, clear, complete, and comparable information. Thus, the main objective should always be to try to simplify and to make easily understood non-financial information. Additionally, I think that to rename the concepts that are well known is not advisable. Setting transformation targets that are too aggressive can lead to disruption and additional confusion at a time where simplification and consolidation are a more pressing need. Thus, I support a multiple capital stakeholder view. I prefer option 2 because it is the option that is most similar to the integrated reporting framework. I would keep social capital instead of people capital, and I would add external to relationship capital to help to clarify it. I believe that integrated reporting has advanced this. Many of us now use we are used to structuring non-financial information using a multi-capital approach. Thus, we just need to go on clarifying the concepts to avoid consistency. Thank you. Back to you, Patrick.
Thank you, Lucia. I turn now to Salvador Marin, who is president of the European Federation of Accountants and Auditors of SMEs. First of all, I congratulate him for the Spanish outreach, and then I give him the floor, and I request 2 minutes. Salvador, the floor is yours.
Okay, thank you so much, Patrick. 2 minutes, sure. First of all, I would like to give thanks to EFFAS, Jean-Paul, Saskia, and Patrick to invite to me like the EFA president, European Federation of Accountants and Auditors. We are a specific organization, umbrella organization for national accountants and auditors. At this moment, we representing more or less 350,000 accountants and auditors. In relation to when having a glance to these options about different areas, 3 or 4 areas, or reporting about sustainability, I can say from my personal point of view or from my experience with SME sustainability, that the 4 areas options, option 2 seems to be more intuitive, like Lucia has mentioned previously to me. Option 2 seems more closely aligned with integrated reporting, multi-capital. But at the same time, I would like to remark from the point of view of small and medium practitioners and small and medium enterprise SMEs, that the most important thing is not discussing about the number of area or even topic. The most important thing, it just has been mentioned, is to have clear standard, clear guidelines, and to apply the proportionality to SMEs. I think it's the best also if you want to apply the trickle down. In my opinion, this is the concept of trickle down, to apply the proportionality to SMEs. Think small first, small regulation. Areas or topics cannot be filled if we don't bear in mind that because of the special characteristic of SMEs, no financial information for them cannot be a burden or a cost. We have to make it easier in order to motivate them with incentives to comply with this requirement, and to disclose this information, and also to require only key aspects to be included in the reporting and mailing retrospective information. For example, perhaps it will be very important to create incentives to SMEs that voluntarily apply no financial reporting directive. For example, facilitate access to finance, tax breaks, public rankings, preferred treatment in public procurement tenders, etc. This is our opinion, because forward-looking information is difficult to have in a small and medium enterprise. Finally, the cost-benefit function for SMEs has to be positive. I am sure that we could reach this objective. I am sure, because I agree with focus on SMEs, because it is clear it is needed proportionally according to size. But at the same time, it is true that all the SMEs are not the same. In the category of SMA are included so different types of company. It not the same are a listed or a non-listed one, and SMEs that operate in a higher risk impact sector or things like that. For that reason, so I agree with distinguishing between category of SMEs, maybe according to the number of employees, but also could be bear in mind other criteria such as listing or reach, basic approach, and we must not forget micro entity, which are so small that needs even more simplification. Proportionality, option 2, and please the content, the trickling down, it will happen. For that reason, we need to pay attention at this key point. Thank you so much.
Thank you, Salvador. Please, Fritz Musberg, Vice Chair from EFFAS and member of the EFFAS ESG Committee. Saskia, you wanted to say something?
I wanted to say that Kirsten Margrethe was also to come in on this slot and has 5 minutes.
Oh,
slot.
Apologies, my mistake. Fritz, my apologies. So, Kirsten, apologies.
Thank you, Saskia and Patrick. First, I would like to remind you about what is said on page 5 in the outreach document. The Executive Vice President Dabrowski is quoted there that the technical advice must analyze and build on existing reporting standards and frameworks to the greatest possible extent. Except from traces of it on page 18, this prerequisite seems to have drowned in the process. And we know that GRI has worked with this topic for more than 20 years and are building their standards and globally recognized frameworks like the OECD's guidelines, the UN guiding principles on business and human rights, Ilo core conventions, etc., etc. It is a bit surprising that none of these have been referenced in the document. There is no doubt that sustainability or ESG reporting, sorry, I can barely take the term non-financial reporting in my mouth, as in my opinion, the term is self-contradictory. ESG reporting is about the topics not covered by traditional financial reporting, but they can be highly financial by nature. Country-by-country reporting, for example, or have significant impacts to the financial results. Consequences of e.g. corruption, pollution or social unrest and loss of reputation. First, I acknowledge that this work has not been finalized by the task force yet, which is probably a reason why I find this part of the Outlook document challenging to understand. When reading it, I still wonder if the task force has looked into existing sustainability reporting standards, which was, as I said, the prerequisite from Dabrowski. With 30 years of experience from ESG reporting, I strive with understanding the language, and I wonder what it is to gain here by using terminology that is not familiar to the ESG reporting practitioners. And where I do understand the proposals, I don't understand what is new about it. I am the first one to admit that current ESG reporting is not perfect. It is still more immature than financial reporting, but it has more than 20 years of evolution, and ignoring the systems developed, the experiences made and the adoption in the serious part of business would be a terrible mistake, setting us years and years backwards. In my opinion, the challenges in ESG reporting can be described as twofold. Not all reporters do it in a good way. Those Patrick referred to in his introduction, where it was more about communication than real reporting. But fortunately, more and more reporters are very serious in this important topic. And the lack of comparability. Well, the first can be solved by appropriate legislation and further improving the good ESG reporting standards that already exists. The lack of comparability is not solved in an easy way. I have been working in the field for 30 years and have had related discussions with investors for the last 15 years. All of them have dreamt about being able to enter our data into a spreadsheet to get an exact answer in the other end. But as for their financial analysis, none have succeeded fully. But the best ones are doing a great job with data collection and quantitative and qualitative analysis. And in my opinion, the qualitative analysis are the most important. The quantitative analysis is only supporting the quality analysis. The immature analyst starts with the quantitative analysis and will sooner or later discover that it is difficult to compare, not only across sectors, but even within the same sector due to the differences in portfolio within the companies. Representing the aluminium sector, it's a huge difference in the material topics and the quantitative bottom line, if it had existed, in the environmental or social statements for an integrated company like Hydro, covering the complete value chain from bauxite mining to recycling or post-consumer scrap, to a company only involved in one step of the value chain, for instance, finished products or recycling. When I look into the option 1 and 2 architecture, I find it a bit old-fashioned to try to put all ESG topics into separate boxes. We have seen in GRI that more and more topics have a cross-cutting impact. For instance, environment and human rights, or corruption and human rights, or corruption and environment, just to mention a few, but very important topics. And including even more categories like in option 2 just adds to the challenge. Interesting, by the way, that human rights has only been included in option 2. For instance, if I have understood it correctly, the reporting areas on page 27 seem to be very prescriptive. If we should have followed such approach, the reports might very well be at least double in the number of pages without improving the readability. I realize that we have short time now, so I will leave it for there. Thank you, Patrick.
Thank you very much, Kirsten. Just one point for clarification. Between sustainability and financial materiality, we all agree in the task force that none is absolutely pure. It's not black and white. You have intensity, you have a rebound effect, or boomerang effect. So it's a matter of intensity and time horizon. So, but you know, not distinguishing the two approaches, even if there are overlaps and connections, is obviously clear. And as regards human rights, be sure that you know the category, the subtopics which are mentioned do not ignore human rights, because you know it's illustrative, and we are not fully happy yet on this. So now, sorry, I turn to Fritz.
Okay, thanks very much. Can you hear me?
Yes, 2 minutes.
Okay. First of all, I have to agree with the statements made by Kirsten. I represent EFFAS, the European Federation of Financial Analyst Societies, and I think I can speak as a voice out of the capital markets and their respective stock-listed companies. Regarding the sustainable standard setting, I think all three different layers mentioned before are somehow important. Regarding a sector-agnostic layer, for sure, mandatory requirements are necessary to be followed by all reporting corporates independent from a sector. A uniform design and format of a sustainable reporting structure should provide also a general guidance for corporates which do not exist at the moment. Also, a sector-specific layer would make sense for some mandatory requirements. At the end, for example, a financial analyst or institutional investor is interested in risks which are coming out of the different ESG areas of a respective company which includes, of course, also reputational risks. This can be environmental, social, or governance risks, which influences a permanent pricing process within a stock market. The entity-specific layer, when it is meant as a corporate-specific layer, also could make sense due to the fact that some companies do have specific risks coming out of areas which are not covered by sector-specific layers. But I think such corporate-specific issues are not that often the case. When it comes to the area of course, an executive management is measured and ultimately paid based on KPIs for a successful execution of strategies and the right decisions. Consequently, reporting areas and an evaluation have to be focused on a company's strategy, the respective implementation, and the final performance measurement. All of this should be related to longer-term KPI targets, which have to be fulfilled, and lastly, on which base a management from stock-listed companies has to be paid for. Regarding the standard setting architecture options, I'm in favor of option 1 due to the fact that ESG is in the meantime the common mainstream terminology of understanding. People and relationships are included in the S from ESG anyway. In the financial market, investment and asset management industry, everybody knows that what ESG is about. Thanks, that was my statement regarding the capital markets area.
Thank you, Fritz. I turn to Dawn for a quick comment, please.
Oh.
No? Okay, if you skip, that's fine. I had you on my list, maybe as a possibility.
She even left all of a sudden.
You know, she was taken by surprise.
I think.
Poor down. So, do we have the? You're on mute, Saskia. Do we have questions?
No. Well, questions, Lena. Do we have questions? We just launched the polling question, so we need a little bit more time there. But Lena, do we have questions?
No questions from the audience for this section yet.
So, Patrick, perhaps we could take the first part of the first speaker of the next session, and then we come back to the polling question so that people have enough time to complete.
Absolutely. So we are going to move to slot 4, reporting structure, and I give the floor to Piotr for his wonderful introductions.
Thank you, Patrick. I hear an echo. No, it's okay right now. So we move to the reporting structure, which is, as Patrick indicated in the very beginning, we are moving now into the sections that were not entirely discussed within the project task force. So the more we move towards 4 and 5, the more tentative are those proposals that you've seen in the outreach documents and we present and discuss. But anyway, when we did the assessment, an extensive assessment in September, October, and part of November at the project task force, we clearly see that the sustainability information today is fragmented and presented in a number of different ways. And this hinders the user's ability to find, understand, and compare information. So at the project task force, we believe that a standard reporting structure should be developed. We see that flexibility of management reports could accommodate two sections devoted to sustainability information. One of those sections would be sustainability statements, and the other one would cover reporting the company's own affairs, such as governance, management vision, or interpretation and judgments regarding sustainability matters. This structure should reflect the reporting architecture and will allow for a taxonomy to be used from the very beginning of sustainability reporting. So sustainability statements could be digitized from the very beginning, for example, to be presented at the European Single Access Point. We tend to think that corporate reporting should be based on two pillars of, let's say, equal weight: financial reporting and sustainability reporting. And for this reason, interconnection between these two pillars is key. Connectivity implies connecting sustainability disclosures to any related financial information. And the future European standard setter should take into consideration a distinction between direct connectivity. For example, sometimes a sustainability disclosure can be linked or is derived from an information that exists already in the financial statements. For example, let's say training costs. And so this direct connectivity and indirect connectivity, and sometimes sustainability disclosure should be put in relation with financial information. For example, when we talk about budget expenses for sustainability matters. This interconnectivity means that the relation is bidirectional in two directions, which means also that financial reporting needs to be coherent with sustainability reporting and not only the other way around. To make it possible, the European standard setter should offer anchor points for financial information, as well as the right methodologies and processes to do this bidirectional interconnection. Thank you very much. Patrick, back to you.
Thank you, Piotr. We will, you know what, Saskia, will give the answers to the following questions together with slot 4, if I may. So, Mark Vassen, please, can you tell us what you think on this?
Yeah, thank you, Patrick. Very happy to. And again, I will try to be certainly within the time, and I would like to really focus on the 4 questions that you have asked on the reporting structure section. And the first one is, would you agree with the proposed reporting structure? I think it is indeed very important that the management report and the financial statements are somehow closely connected and be given the kind of the same weight. I think that is the direction that you're proposing, because you actually note that at the moment there are different flavors of management, the sustainability reports being separate from the financial statements, and actually making them more connected would, in our sense, make much more sense. There's also a position that Accountancy Europe has actually expressed in the past. That will also, I think, facilitate integration and integrated thinking, which are, I think, important concepts. In the way to do it, we have thought that maybe it is worth still thinking whether you could distinguishing between what is non-financial information, for better word, or sustainability information that is important for value creation, and which one is actually important for the wider impacts. Because the one that are important for value creation clearly would have much more of a capital markets focus, and they would therefore more closely link to the financial statements who have the same perspective. But that is not to say that, the other information on the wider impact could also be part of the management report, but maybe in a different section, or even, and I come back to, one of the concepts that Accountancy Europe has once tabled, could be somehow be captured in a concept of core and more. But I give that as a thought to the project task force. But I think so both could be part of the management report, but you also have to think, if I think in the paper-based world at the moment, I would be a bit worried as to what it actually does for the volume. If you include both of the dimensions in the management report all together. So that's why I say maybe the core and more idea has some merit to think about further. That said, I would like to go then to, we will move on from paper-based. And so you're asking questions about digitalization and the taxonomy, and I think it's something that we would be very supportive of. I think the sustainability reporting should become a part of the digital provision of information. I think users are clearly looking for these data digitally. So that's what is something that we would definitely support. It is important that then we need to have robust standards. They are a prerequisite. If we have a solid base of standards, this would actually minimize the cost in the long run. So I will be not longer on the taxonomies, but just expressing support. Then I think, Patrick, one that we have discussed before that we find very important indeed is the interconnection and the anchoring with financial reports. Again, there I think we would fully agree that it is key that there is a connection between financial information and the sustainability reporting information. But I think there's also another dimension. There's also the connection between what I call the enterprise value relevant sustainability disclosures and the more specific detailed sustainability reports on for example, certain impacts that have a wider social impact. And also that connectivity is important to keep in mind. I think these are some of the key elements for the enterprise value related reporting. I think you need to keep that connection with financial reporting very clear. That means also liaising with the IASB, because in Europe we have a standard setter to whom we have delegated part of the financial reporting standard setting. So it needs to be a close connection also with the standard setter there in order to actually ensure that interconnectivity. And I think a good example is the recent IFRS educational guidance on climate risks, which shows also the kind of the crossover between the two topics. And it is important that is being streamlined in good consultation. Okay, I think I've already mentioned the importance of integrated thinking, that corporate reporting should overcome separate thinking for financial statements and sustainability reporting. As at the end of the day, these data, and also the way that the company thinks about issues should be fully integrated and incorporated, and therefore we would also think that there may be a need for an interconnected framework. But I think, Patrick, you said an interconnected framework would probably be at the level 1 rather than at the level 2, right? But I think certainly something that binds the two together also in terms of the framework principles will probably be useful. I'm going to stop here, Patrick. These were my comments. Thank you very much.
Thank you, Mark. For clarification purposes, interconnection is on the one side a governance issue, but it's also a technical issue. And we insist on the fact that, as Piotr mentioned, we have a two-way traffic between the two pillars of corporate of standardized corporate reporting. That leads me to make one more comment, which is the task force is tempted to support the idea of sustainability statements as a section of the management report in order to identify what is standardized, to have a location where it's very clear that we create the interconnection. We have also the level of auditability that we define. We have a clear perimeter, and we leave the full spectrum of management and governance, willingness to express enthusiasm, judgment, vision, long-term, and to integrate the factors. But in order to integrate, you better start from two clearly identified, standardized perimeters. So the factual standardized information would be under two legs, and the rest of the management report would be the overarching explanation of the integrating thinking behind, and the vision supporting. So that's why we are tempted by this proposal. So now I turn to Salvador, por favor.
Thank you. Gracias. Thank you so much, Patrick. Following the good speech from my colleague, Mark, by saying I fully agree, and of course I agree with your last opinion, Patrick. Only I would like to remark that it's clear that currently there is no financial information published in a lot of different ways, no? Only in one report together with financial information, included in a separate report, in the management report, but in different locations, and even in a different website. And no financial information should be clearly identified, and it needs to know where to include and to find it, no? Did you say, no? To know clearly where to include and where to find all the non-financial information is to make sure the disclosure of this information for companies, for elaborators, for verifiers, auditors, and also for users as supervisors. SMEs that are the backbone of the European economy need to have clear rules and a level playing field to can be motivated to issue the sustainability information. I know that the idea of clearly have all the non-financial in one place about what's working the project task force or non-financial reporting standard in EFFAS is more than proven. Moreover, last Wednesday, in the first of the European outreach of the world of this EFFAS project, task force on non-financial reporting standard, that was held in Spain, an audience of more than 1,300 people answered the poll about this need and where to include this information, and the majority option, without any doubt, was the inclusion of all the non-financial information in a clearly identified section of the management report, of course, with interactions or that you want, no? This is our opinion, even my experience. This is the best option, is the option for SMEs. And others important topic related to formal non-financial information digitalization of this reporting. I fully agree with my colleague. It's very important the digitalization. Now we are working from the European Federation of Accounting Auditors in this way, and it would also help to SMEs and SMEs to can provide non-financial information. It is a clear and accessible reporting structure. Digitization means to can provide a digital taxonomy in order to can easily classify this information to allow its agile access and analysis. For that reason, to support, full support about digitization, about to can provide a digital taxonomy in order facilitate to prepare this non-financial information. This is another important point to bear in mind, and that is also being worked by the EFFAS project for that you are the chairman at this moment. Thank you so much.
Thank you, Salvador. Now I turn to Isabel Sherman, who is coming from who is Confederal Secretary of the European Trade Unions Confederations. And you asked the floor previously on architecture. So if you want to cover what you wanted to say, then please do it now. Thank you. And thanks for having been patient.
Thank you very much. I hope you can hear me clearly.
Yes.
Thank you for your invitations, and thank you for the initiative, and also for having us on board in these very important discussions, and also in the working group. I think this is expert group. This is for us key, and it speaks indeed for the inclusive approach when it comes to non-financial reporting and the relationship with the stakeholders. And I think this is for us key. Likewise, we think it is key to stick to existing concept. And here I think the SDGs on one side, but also the issue of the taxonomy, not alone the financial taxonomy development around the issue of environment, social and governance is for us key. So not to create more confusion in the discussions. Likewise, it is important that the architecture is based on a not selective or selective pieces of those important elements, but to have a combined and inclusive approach, which should be also comprehensive. And here, I think it is very important when you look at the social, and I was interested about the slides that were put on the online on the screen. I think when it comes to socials, I think we have to be clear about what we are speaking about, and that those standards should stick to existing international standards. And I think the Ilo Conventions were mentioned, and I can recall that some of the main core 8 Ilo Conventions include the right to organize and the right to bargain collectively, next to the issue of working time. So I think this is also issues that should be taken on board and be part of a non-financial reporting exercise. And the second point I would like to mention is the architectures. Within the architectures is, to my point of view, the seriousness with which the issue of reporting as such, and non-financial reporting in particular, is taken by businesses. And I'm a bit concerned to hear, and it was the case today, that this reporting should lead to very little effort, should not take any time, and is reduced in clearly as something that's nice to have, but much more perceived as an administrative burden. And we have also heard that it is getting into the direction of over-regulation. And I think we have to clearly make sure that this is not the context in which business have to report, not the context in which business should perceive reporting. And I think it's the narrative should be very moving towards reporting equal investment. And I think this is an important element, investment in society, and not just investment for the sake of making profit. And I think this is exactly where the SDGs and the necessity to have a taxonomy looking into the issue of environment, social and governance is of importance. And I think this is also how business take their responsibility towards society, and the serious exercise when it comes to accountability. Non-financial reporting should also be an ongoing process, which should relay and rely on existing obligation, and in particular when it comes to non-financial reporting, may I recall existing legislation on which any standard at the European level should build on, and those standards are laid on in the treaty, in first and secondary legislations, and even at the national level. So I think they should be taken into consideration when it comes to the information, consultation and participation of the workers and their representative in the decision-making processes of businesses. And this is exactly why reporting is important, because it helps to inform decision-making processes in businesses. And I think here to take on board the workforce is an obligation, is a duty of businesses. And I think this should be the way that standards should include workers in their decision-making processes, likewise in the governance of the businesses. And I would also relay one of the points that was made by a previous speaker in this setting today, is the very importance of the country by country reporting, where you have key social indicators, and not reinvent the wheel. I think this is also something that should be built upon. Likewise, the necessity to have a section on sustainability in management report. And I will stop here, and thank you for your attention.
Thank you, Isabelle. Thank you very much. We have shorter interventions. I will really ask to limit that to 2 minutes each. So Wim Bartels.
Yeah, thank you very much, Patrick. And here we go with the 2 minutes. I would like to come back on the separate sustainability statements, put that in the context of increasing integrated reporting, but more importantly, also put it in the context of value and forward-looking information, as the ESS also have identified themselves. And with all that, I'm not sure that separate sustainability statements would really address the need and decision useful information, because data are not interesting if they don't have an explanation of a narrative to it. So you would need that further information, and these interconnections are in many cases made in the management report. My other concern with this is that if you would ask for separate sustainability statements, that we would see many companies sticking to it and making it an exercise that does not relate in any regard to their strategy, to their ongoing performance, and that I think is not what the EU should strive for. A final comment in this case is that the diagram that was shown now shows the interconnections between sustainability reporting and financial reporting, rightly so, but there are also many interconnections normally between sustainability information and the rest of the management report. So in that regard, I think the task force could, let's say, strengthen the diagram with also showing the rest of the management report. I have 2 points on the reporting taxonomy. One is a question, and to consider is how the taxonomy would relate to a principle-based approach that has also been suggested for the ESS, and entity-level specific issues. I myself have come across many situations where a specific entity had a very specific non-financial or sustainability topic that was not in any standard, but was still very relevant for that company. And we know that sustainability or non-financial issues are evolving over time. We are currently starting to talk about biodiversity. In a couple of years, we might talk about discrimination, and all these topics evolve and sometimes are very entity specific. So for the task force to consider how that works with the taxonomy. And my final point that we discussed also with the Dutch Accounting Standards Board is about the pace of development of the standards. Having learned from other exercises where developing a taxonomy from the beginning may actually hinder the progress that you may need. So it may be a suggestion to think about developing these in parallel and start with the first standard whilst in parallel developing the taxonomy. With that, Patrick, over to you. Thank you very much.
Thank you, Wim. A couple of clarifications. Sustainability statements wouldn't exclude at all narrative information, not at all. The narrative disclosures related to sustainability would be included in the sustainability statements, because sustainability is based, in fact, on 3 major types of information: qualitative or narrative, quantitative non-monetary, and quantitative monetary, if you oversimplify. So that would be encompassed within the perimeter of sustainability statements, so no risk. And as regards the taxonomy, the entity specific is something that is known under US GAAP or under IFRS. You know that the number of extensions as compared to the predefined tags, the number is important. So that is inevitable. you have, when you have entity specific, you are in the space of you reduce comparability, you increase relevance, but then you are in the world of what we call extensions in terms of digital terminology. So just for clarification, Lucia, you wanted to have a word here. You're on mute. You're still on mute.
Thank you.
Okay, you're back.
I will be short. I believe that the interconnection between financial and non-financial reporting is very important. It is necessary to guarantee the consistency between both kinds of information. Additionally, if you want financial and sustainability reporting be connected, I believe that we should have both reports in the same document. I support the idea of including sustainability statements in a dedicated section of the management report. Although some listed companies in Portugal present standalone reports using the GRI framework, most of Portuguese companies are presenting a combined report. Thus, I believe that combined report is the most appropriate format. I would like to raise the point here about assurance, because I think it is very important for the quality of the financial and non-financial information. Sustainability reporting must be in accord with sustainability activities. At the moment, auditors in many countries are only required to assure that the company presents the non-financial reporting statement. That this is not enough. I believe users need to be sure that sustainability reporting is not being used as an organization facade or something they just use to improve legitimacy and reputation. As you told before, Patrick, greenwashing, social watching, and cherry-picking behaviors should be controlled by regulators and auditors. Research over the last 20 years has been showing that these are serious problems. I support the idea of adopting a reporting taxonomy as soon as possible to be applied to each issued standard. Harmonization and comparability are the main issues when we talk about the non-financial reporting. Thus, I believe that taxonomies have an important role in fostering comparability. There is a strong need for greater comparability in non-financial reporting. The emergence of a single, recognizing, commonly adopted and enforced set of sustainability standards in the European Union, I believe, would further the attainment of this goal. Thank you. Back to you, Patrick.
Thank you very much, Lucia. Alina?
A lot of business owners are aware of their accountability and work hard on reducing negative impacts and on rising positive impacts on society, on the environment, on individuals, and on the companies. They see the big picture. And yesterday, some of the people I talked to said to me, yeah, when you don't focus on sustainability, you simply will disappear. For the entrepreneurs of these SMEs, their business forms a whole. They do not speak in separate parts. For them, it's one story. Their strategy and their commitment give direction to their business. They will not find it easy to divide all the information and the data into different places, into different files or boxes, what belongs where and how to organize it are relevant issues. A new report must include a core, the materiality on sustainability and financial teams. This should not be an extensive report for SMEs, but a document as compact as possible. Perhaps it can be included in the annual report, the financial statements for companies that file it. There could then be a concise summary, and the explanation could then be provided, for example, through the company's own communications channels. Where will companies and organizations that have no management report have to report when the new standard is ready? an important question is who already draws up a sustainability report according to the GRI. Must they then report separately via the new standard, or can they be considered equivalent? A company that does not do so can then work via the new standard. For example, a company that has already written a GRI report can then continue to do so, or can't they? And I really have to, I think the Isabel is not in a meeting for this moment, but I wrote a sustainability report with an audit from PwC, PricewaterhouseCoopers, and we made it together, but I may think that you can imagine what the price was that we paid for the audit for our sustainability report. And we had an offer of Ernst & Young, for example. They wanted to do it too, but it costs all the hours of the people who are visiting your business, who are checking the data. And for a small company, it is really, really, really a big impact on what the cost is not only getting all the data together, writing it, making the report, but an audit is really expensive. And I don't think that there are many SMEs that make the choice to come to visit and to check the data, because it's just not possible to pay it. And that doesn't mean that they don't find it important to report. It's just the cost that makes it not possible to do it. So I really needed to add it to the meeting.
Thank you.
Thank you.
Kirsten.
Thank you. First, I would just like to say many wise words from Wim and from Alina here, and to Alina's concerns, even from us in the big corporations, the SME concerns are important, because good SME reporting is so important to our supply chain and our reporting on that. To Isabel and Louisa, I think that it's important to realize that the serious reporters do not believe we will report less in the future. But we're occupied that the additional workload we will have, and know we will have, should be spent on better reporting, not just more reporting, and in particular not on double reporting. I agree to the reporting structure that there should be certain directions in what should be included in the sign-off of the management report. Being too prescriptive in the format can, however, give unforeseen results and give a report that is neither balanced, representative for the reporting organization, nor easy to read. So there must be a balance here. And if you need good examples on how to do it, Integrated Reporting publishes examples of good such reporting, and I'm sure that GRI will guide you to other examples if they are asked. Related to the taxonomy, a reporting structure based upon, and I'm quoting from page 36, upon clear and stable classification of disclosures is a prerequisite also in ESG reporting. GRI has a good approach, so does DASB. And if an organization with enough resources can help developing it further, that would be appreciated, not least to prepare it for better machine readability. Related to interconnection, I must admit that I strive to understand what is being described on page 37. But if it is about integrated reporting, I'm generally in favor, as I have said several times before. And to conclude, I believe that the best way of better connecting ESG reporting with financial reporting is that the two professions create better common arenas to collaborate, drawing on the best from both disciplines. Thank you.
Thank you, Kirsten. Michaela.
Yes, thank you, Patrick. I wanted to add something about the location of the sustainability information. I personally agree that this is the direction to have an integrated management report, which contains also the information, the financial and non-financial information. But what I wanted to emphasize is that for some companies that have not so much experience in preparing non-financial information, and some of them in management reports, like SMEs or other companies, you should take into consideration the timing and to give them time to get to receive more experience, to gain more experience. In this time, if we oblige companies to introduce the sustainability into the management report, is going to be a problem of the timing. In order to do this, you need to have the report ready until the end of February or the beginning of March in order to have the necessary approval. And this means to have also a management report which is audited. So if we want to make a complex project based on this standard, which can demonstrate the entire impact of the company and risk, both inside and outside perspective, and also with the forward-looking perspective, we need time to leave for the companies to prepare, and I mean all the companies, not only for the most experienced one, but also for the other one. Thank you very much. This was what I wanted to say.
Thank you. Saskia, in the interest of time, may I ask you to give the results of the polling questions, the previous ones on slot 3 and the current ones?
Okay, well, let's start with the last one. So the location for sustainability reporting. So there are clearly two preferences. The highest preference is in the dedicated section of the management report, but then a second runner-up is the integrated report where relevant. So it seems to be quite some support of the approach of the task force. And then there is a large support for that financial reporting and sustainability reporting should be on eco footing. So that is also in line what we just heard from the speakers. Then on the other questions that related to the previous section, the multi-capital approach was largely favored by most of the stakeholders or the audience that reacted to the question. And linking reporting areas with business or management decision making and business reporting was also largely supported. That's it, Patrick.
And on 3, we'll try to recap at the end. Okay, fine. So thank you. It's we are late a little bit, but we are moving to the fifth slot. Apologies for the delay. Piotr, please.
Thank you, Patrick. First, allow me a short summary of what we've been discussing today. Could I ask this for slide 17? The project task force proposes the architecture of the future sustainability reporting system to be based on 5 building blocks and 2 overarching principles that form the foundations of the European standard setting. A set of operational guidelines that help the standard setter to build the reporting standards. Then a unified architecture based on 3 layers of disclosures and 2 reporting dimensions, and a precise reporting structure that allows digitization of disclosures and interconnection with financial reporting. It is an immense work to be done by the standard setter under time pressure. We acknowledge as the project task force that the European Union sustainability momentum requires a major step forward in sustainability reporting. We assume that the priorities should be taken into account and the coherent first set of disclosures should be delivered. We also believe that cooperation with European and international initiatives is important to ensure convergence and the level playing field. And as this is my last intervention during today's meeting, let me express my very high hopes that the momentum in advancing sustainability reporting is tremendous today. And I say it being in constant contact with many companies, not only the large ones, but also medium and small companies, helping them to manage sustainability matters and understanding the challenges they face. The momentum is tremendous. The level of dedication I see in the members of the project task force working tirelessly for the last 5 months is great. The deadlines and targets set by the Commission are demanding and ambitious, and that's very good. And finally, the number of attendees of the outreach events and the level of your expertise show that it is indeed the turn of the tide. What we are doing with your help, your comments and your advice will not only reshape sustainability reporting. I trust it is going to transform the European and global economy into a sustainable and regenerative one. In fact, I feel that the new sustainability reporting system may be one of the green swans that John Elkington wrote in his book less than a year ago. Thank you. Patrick, back to you.
Piotr, it was a takeaway before a takeaway. Thank you. So now I turn to Fritz on priorities and interaction with international initiatives.
Okay, thank you. I try to be short. First of all, thanks again for being able to speak here at this EFRAG webinar. I'm the representative, the deputy chairman of EFFAS. This is the European Federation of Financial Analyst Societies. EFFAS is an umbrella organization of all the European financial analyst societies with around 16,000 members in Europe. We do have a long-lasting experience in ESG due to the fact that we founded an EFFAS Commission on ESG in 2007, means before the financial crisis, where I was a founding member and I was chairing the Commission until 2018 afterwards. I'm still a member there, and our goal at that time was in 2007 pushing the topic forward for becoming mainstream on capital markets, which is partly now already the case. Just as an example, the market share of sustainable investment funds in the asset management industry was in 2007 roughly 3%. Now it is around 35% in relation to total assets under management on a global base. As a commission, we organized also over the past years different ESG conferences, for example, in Frankfurt, Paris, Madrid, Oslo, or Stockholm, for respective business-specific investment professionals. The most important issue to mention here is that we established a very comprehensive report on so-called EFFAS ESG sector KPIs, which represents purely non-financial reporting standards for 10 sectors and 114 subsectors. Unfortunately, this extensive report consists of about 170 pages, but it is available as a PDF on our EFFAS website. Why I'm saying this? Because based on these very detailed non-financial standard KPIs and the related methodology, STOXX, the international index provider, calculates so-called stocks ESG indices, which are available in the market via financial information service providers. Once again, why I'm saying this, ESG arrived in the financial industry, and the sustainability momentum calls for a uniform reporting and a common set of disclosures and standards. Unfortunately, there is a large number of initiatives on standard setting which has to be aligned with a strong need for convergence and harmonization. Also in the financial analysis and research area, as well in the asset management industry, there is a variety of completely different evaluation models and methods on a quantitative and qualitative base available, which nobody can really follow anymore. Therefore, we as EFFAS very much welcome a uniform state-of-the-art standard setting, architecture and reporting structure for at least the EU as a single European market. Thank you very much for your attention.
Thank you, Fritz. Nicolas?
Thank you, Patrick. Can you hear me?
Yes, we can.
Excellent, thank you. Well, a lot has been said. So for the sake of time, I will have to boil my wish list down to one priority, which will be, and not surprisingly, about streamlining and ensuring consistency. We're having today a European perspective. We have plenty of European initiative relating to sustainability going on. This is a great momentum, it has been said, and all these initiatives have to be considered. And for instance, and very concretely, it is important to align with the European Green Deal and the recovery plan priorities. It was mentioned in the building block number one. We have to align with the European disclosure and the taxonomy, and we already have a set of indicators and some reporting requirements in there. Of course, we need to ensure harmonization, not alignment, but harmonization with existing international guidelines and frameworks. We have most of the company have global operations, global stakeholders, if I can say so, and the idea is not to be snowed under the reporting requirements. Last but not least, we are currently responding to the consultation on sustainable governance and the European due diligence, which of course in terms of reporting relates to the value chain. In other words, all of the above is important. There is a great momentum, and if we want this European principle-based approach to work and to prevail, then the convergence and the consistency, I believe, is the essence. So I had to choose one priority, and given today's European focus, that's the one convergence between this ESS important work and the ongoing European initiatives. That's it for me. Patrick, to be short.
Thank you. Thank you very much. Thank you, Nicolas. Vanessa?
Thank you, Patrick. Yes, I'll also be brief in my remarks. I want to say that the priority should be to keep momentum, and there are several ways to do this. There's a wonderful momentum building, and I agree with the contributions this afternoon that this is indeed, and as Peter said, a shift. There's a shift happening. So let's keep the momentum by building on the existing harmonization platforms. There's a number, I'm not going to list them, you all know what they are. And secondly, also to focus on the subtopics, data quality, and to leave the reporting more flexible for the preparers to use. I like the suggestion around the management report and building on what there is. I think that will help us to keep momentum and get going. And then, as is set out in what you've shared with us, definitely we do want to see that exemplar disclosures, that prototype. I think that would really help to clarify also what we're talking about and get that consensus around what is meant. But thank you for the afternoon and for the inputs, a lot to digest, and also for the work done by the task force.
Thank you. Lucia?
Thank you. I think it would be pragmatic to say that we should prioritize climate-related disclosures. There is a relatively high level of agreement in the area and an urgent planetary need to address these issues. However, I believe social issues such as human rights, gender and race issues, rights of communities are also at the forefront of many stakeholders' minds. So in addition, financial information relates to intangibles that drive wealth creation in modern economies should not be ignored. Thus, it would be good if several groups could deal at the same time with different issues, developing standards related to all issues at the same time. But considering the work involved, perhaps the most important priority at the moment can be to prepare a coherent first set of requirements that are consistent with other international frameworks. I believe that there is no need to reinvent the wheel. Thus, I believe that the interactions between the European Union and other international frameworks is very important. This interaction is already visible in the document, for example, presenting a multiple capital approach, linking with the integrated reporting framework, and in producing sector-specific standards or guidelines suggested by the GRI and the Sustainability Accounting Standards Board. In doing this interaction, I believe there is no need to rename topics and subtopics, concepts, and terms that have been used for many years. I believe also that this approach may help to achieve an alignment of objectives for Europe and for a larger number of countries globally. It is my view that SMEs that belong to modern economy sectors and those which are required by suppliers to comply with quality standards, namely relate to environment and employees, will benefit from a sustainability simplified standard. It's a priority at the moment. Thank you. Over to you, Patrick.
Thank you very much. Maria Alexiu.
Thank you, Patrick. I think in order to save some time, I will further agree with the priorities said already, but allow me to add my own view regarding the need, as an urgent need, to take a step-by-step approach, moving beyond the compliance and guidance mode. This is not enough as we are right now. We probably need to equip preparers and users of the reports with the skills and competencies needed to understand the sustainability-related aspects. One of the equipments is a glossary or a terminology that will be commonly agreed. We have to speak the same language. This will build consensus to cultivate and enforce the changes we need to enforce. Changes cannot happen by law. They will happen when they become standard practice. So we need the standards that we already use to become standard practice. To encourage that, we need to build further our skills and to reskill even in specific departments of our organization. This will take time, but also needs to take some type of motivation. On top of that, we need further to work on policy alignment. When I earlier spoke about overregulation, if we look the big picture, there are a number of new initiatives coming that will create confusion, and more burdens from all sides, both from the side of preparers and of the side of users. So let's specify. We will use the integrated format of report for which stakeholders, in order to help set the right questions and use the right standards to answer the right questions properly and effectively. And then let's work on policy alignment in order of not building pieces of regulation and standards that are not connected. One example to close my topic here is, for example, the discussion that is taking place on due diligence in the supply chain. This is a very important piece of legislation regarding SMEs. And of course, we agree that we need all to report, because otherwise the context reporting is not possible to be given. Take as example, let's say, emissions in scope 3. How we can report properly, accurately, qualitatively scope 3 emissions if we are not all measuring our emissions and not reporting them properly. So the greater danger we have here is to lose the opportunity to get the maturity that we are missing inside organizations and beyond organizations among stakeholders, and make this meaningful to build what we want to build, a sustainable and more sustainable and inclusive business model, economy model. So let's give resources to build the gaps we have in skills and competencies immediately. Thank you.
Thank you, Maria. Down, and then Mark. Down.
Thank you, Patrick, and apologies about earlier. Well, let me say that I've been really riveted to the conversations here. It's been extremely interesting. But in closing here, the big issue for the investment community is accessing data and having companies report the right type of data in a timely manner. And I know this is about, the topic around, as we discussed, comparability, reliability, and the harmonization. But I couldn't understate how or overstate how important this is for investors, that companies realize in order for us to get this virtuous circle where effectively investors are getting the data they need, companies are upping their game on the sustainability agenda and attracting more capital. This really is the situation we want to get to. And yes, the regulations start that process, and disclosures are really scratching the surface in the sense that we really want to make sure the action is deep and embedded in all of the organizations across the life cycle, the full value chain of organizations. And effectively, I understand and hear companies saying that this is difficult, but this is difficult. It's difficult for everyone, and this burden has to be shared by everyone. And I think that through the European Green Deal, as much as possible can be done to help sectors of the economy deal with the learning and the processes involved. But everyone really has to do their absolute utmost, and time is of the essence. And this will start, as I say, that virtuous cycle of investments moving into sustainable activities, creating jobs and boosting the economy. And that's where we want to get to. Thank you.
Thank you, Dan. Mark now, if I may.
Yeah, thank you, Patrick. And again, I will really be short, because I think most of what I'm going to say has already been said, but I think it is good to reiterate. You say that the last sections were maybe still under discussion with the task force, and in particular, I would like to emphasize the importance of the international cooperation. Because that has been mentioned, I think, by also today again. I've heard from they prepare us also from the users in saying that please avoid duplication. And so therefore we would also, and we have also communicated that in other responses, for example, to the ad personam mandate for Jean-Paul Gauzès, that we do support as Accountancy Europe the European standards, but we do feel that they need to build on what's already there, and that they need to build on also in the future, hopefully on a core of global standards where we would actually address the specific needs of Europe through specific European standards, but really build and use it as the global standards as a building block. And I think that is something that at the moment is not yet fully coming through in the report. And I would really hope that the project task force, provides clarity on that in the final report. Thank you very much.
Thank you. Thank you very much. Saskia, do we have the answers to the question, and we need to wrap up?
Yes. So the answer to the last question was basically the first three elements were most favored. We asked people they could select more than one answer. So the first one was a coherent first set of requirements. That would be the first priority. Simplifying and streamlining was actually the third, and defining the foundations and the operational guidelines was the second. So Patrick, shall I rapidly go into the close and see if we can do that relatively quickly?
Yeah. I have a couple of takeaways you want to highlight, or
Yeah, I have made some. I tried to type up what I heard of what sort of brought me to my attention during the thing. So. Shall I start and you want to complete in the end, Patrick? Or
Sure. Go ahead.
Okay, so I think I heard from many of you saying thanks to the project task force, congratulations. Absolutely a challenging timetable, very ambitious, so good luck is basically the message. Then words that came to the attention were really momentum, urgent, climate change, timeliness, time sensitivity. If I then go to the sort of each of the sections, if we say on the foundations, there was overall support for the approach. Need for implementation guidance was underlined. Ask for a third principle, equal standing with financial reporting. Also a call for a further building block, building on global standards, to have it as a building block rather than in the later part of the proposals. Relevance is a key word. Comparability, yes, but not at the expense of relevance. Proportionality for SMEs, and more alignment in the terminology used with the commonly used terminology in the world, at least to provide a bridge. And I think it came at several instances. Access to data is very, very important, and the quality of data, which was also underlined just by Dawn. So on operational guidelines, mentioning of a conceptual framework, where Patrick indicated that actually was more level 1 than this level 2 proposals. Forward-looking, the time horizon, how would it impact both sides of double materiality? Double materiality also mentioned concerned that material information could also be missed, and what would be the appropriate level? How would that be dealt with, entity sector, and even how to consolidate? Also suggesting that dynamic materiality might be a better term. On the architecture, support for the 3-layer approach, so general, sector specific, and entity specific. We had a lot of remarks on SMEs, so the cost and efforts for SMEs need to be taken into account, and the cost-benefit trade-off needs to be positive. I think Alina clearly indicated that there's a great willingness for SMEs to report on it, but they have to know how to do it, and they are realizing that they have to work on the environment, on the sustainability, otherwise they will not be in business in the longer run. It needs to be understandable. Suggestion as well that perhaps the SDGs they are well known and could be included in the reporting themes. The trickle-down effect was mentioned for SMEs. Then a general remark was that on the topics, how would the cross-cutting impacts be dealt with? And then on the options that Piotr presented, the option 1 and 2, we had different views of of the participants. So there was not a clear guidance on where to go there, but alignment with existing standards was mentioned. Then if we go to the structure, I think the support for the connectivity between with financial information and the digitization was well supported. Reporting in the management report, also amongst you there was, I think, a majority saying as well for a specialized session or a dedicated session in the manager report of this sustainability statement, although not all agreed. Was the suggestion, would it not to be voluminous and should it be distinguished in non-financial information related to value creation and non-financial information for the wider impact on society? So Mark referred to the core and more concept idea. Need to clarify what social is and what it should contain, including reporting on investment in society and not only money-wise. How the taxonomy would relate to a principles-based approach and how to deal with entity-specific, but I think Patrick sort of answered that. And there was several of you who said that the taxonomy should be developed in parallel, that would be beneficial rather than having first the standards. And attention for SMEs, because they may not have a management report. Then coming to the last section, priorities, streamlining and ensuring consistency, keeping momentum, leaving some flexibility. Examples of disclosures would be helpful. Several times mentioned, and also in the mandate of Executive Vice President Dombrovskis, the building on global standards, prioritizing climate-related disclosures, a commonly agreed glossary to speak with the same language, and I will end with the beginning then also the accessing of data. I want to say as well a big thanks, of course, to the speakers for all the contributions to this work and to the project task force. I also want to mention our co-hosting organizations, because we have 10. So Accountancy Europe, CSR Europe, the Dutch Standard Setter, ecoDa, EFAA, EFFAS, European Accounting Association, European Issuers, Eurosif, SMEunited. They have been very helpful in promoting this webinar, and actually, and even more helpful in getting you all around the table, because it was not easy to do so over Christmas, so they have been of a great help. And then, of course, a thank as well from EFRAG to the project task force, who do all of them work on a voluntary basis for all the work done, and perhaps even more for the work that is still to be undertaken by them, because this will not be so easy.
Saskia?
Yes, Patrick?
No, go ahead.
What?
No. Sorry, I interrupted.
No. I thought perhaps you wanted to come in between, because I'm reaching the end actually to say that the audience is also very important to us, and that you have contributed to the polling questions, also to the questions you ask, which have not all been answered because of the time, but they will be taken into account and considered when we come to the reporting back on this webinar to the project task force. And for the audience, in case they have not enough, like Jean-Paul mentioned in the beginning, like Patrick mentioned, on Monday we have the financial institutions one, which is also held in English, and then we have 3 more in local languages: Germany on Monday, the French one on Thursday, and the Italian one on Friday. Patrick, I will say have a nice weekend to everybody, but I will hand back to you so that you can have the last word.
Thank you very much, Saskia. It's the conclusion of the conclusion, so I will not repeat my very warm thank you to all of you, panelists and participants, and also EFRAG for organizing this with the professionalism that we know. I personally have in addition to what Saskia summarized in a very efficient way, I would add something. Which is point 1, I think there is an acknowledgement of the EU momentum, which we feel very strongly from the outreach and from the outreach events, and including this one. But we feel also under this first point the need to consider this as an opportunity when some might consider it as a potential additional burden. So let's be very careful to bring everybody on board. The second point which I wanted to make is that there is a serious need for a second step in sustainability reporting. I think that everybody would agree to that. The third point is that, of course, it would be a bad idea to reinvent the wheel. We need to build on where we are and on what exists. But we need to go also the extra mile, a step further probably. We have to reach maturity in terms of sustainability reporting. The 20 years of experience have been mentioned. That's fine, but where we are is not satisfactory. So we need some sort of a quantum leap. But that should be also combined with, a step-by-step approach, because we are not going to create a revolution in a couple of years. It will require probably a little time and a lot of pragmatism and a lot of, education, training, onboarding, by governance, by everybody. My fourth point is that the ultimate goal is, what is missing today is relevance, comparability, and reliability. So that's the challenge. We need to create that in order to have a level playing field in the EU, and probably the EU would be one of the first areas, jurisdictions, to have that under a public legitimacy umbrella, which is key. We are going to use, the key point is that public legitimacy is going to be used as a leverage to make sure that we succeed in the next step and create the virtuous circle that we are all looking for. Point 5 is that, of course, there is, from what I heard a lot, the need for coherence and alignment in the EU in terms of sustainability reporting. There is a mushrooming number of initiatives, and all of that needs to be put together with an emphasis on the quality of data to start with. Because, you can have lots of initiatives. It's a bit one of the weaknesses of our legal system. We tend to think that when we have solved the legislative level, we have solved everything. Then, it has to cascade down in the daily life and in practice. So point 5 is, of course, the coherence of the EU momentum to put some, clarity and coherence in the overall landscape. We need, of course, to onboard, sustainability matters are not only for large entities and not only for capital markets. It is a topic for the evolution of the economy as a whole. Now, proportionality has to be absolutely taken on board in order to avoid overburdening. But I am personally a great believer in virtuous circles. I personally think that, against the theoretical, proverb which says that bad money is excluding good money, I believe that, on the contrary, that good money expels bad money. So I think that via exemplarity, a lot can be achieved. And therefore, by the way, the current thinking of the Commission, I think that you're aware of that for SMEs it might be voluntary in the first step. Which I think would be a great step forward. And last but not least, of course, the need for international cooperation. But in my view, and I think that this is what is expressed, will be expressed, because at this stage we have not finalized our thinking in the task force. It's a two-way traffic. The EU is somehow one of the jurisdictions which is pioneering in terms of reporting and sustainability reporting. So I think that the EU has a lot to bring, and also that it would be stupid to reinvent the wheel. Now, you need probably to make sure when you onboard what is being done elsewhere, and there are lots of interesting contributions, you need to get that through the filter of the EU-specific questions. Because if something is done under financial materiality, you have to check sustainability materiality. If it has been done under governance that is too specific and that is not accountable enough under an EU system, you need to check the governance and you need to check that there is no bias. So, you know, I'm just explaining one or two. So for me, there is a great field for cooperation, which in my view is absolutely key and is the stepping stone of the progress. In addition, you know, if the EU is moving forward as the intention seems to be, I mean, they will need urgently a first set of mandatory standards. And in order to do that, if you exclude somehow a endorsement, simple endorsement, but, you know, a customization plus complements, if I were simplify, you need to work very hard and very quickly. So thank you very much for your attention. Sorry to have overrun a little bit. So we are half an hour late. Apologies. And thank you for staying with us. Have a good weekend. Thank you very much.
Thanks a lot.
Thank you. All the best.
Thank you. All the best.